Good evening, everyone. Good evening, Shubham. Good evening, Tilika. Okay, this is your first class. Very good. We haven't started much. We just did the orientation yesterday for audit, like exam. We basically what this exam is about, and just share my screen and video. So please let me know if my audio, video, everything is fine. Can I start? So I would definitely recommend to watch the last hour of yesterday class for starting this chapter. In yesterday class, just to give you a quick context, what we did, we started the chapter number 1, introduction. First 2 hours was complete orientation of audit and related to ACCA questions. So if you want, you can skip that. If you need, you can watch that. Now, we started with the audit and assurance. We discussed what is an assurance. Assurance is that a practitioner, let's say me, who is an ACCA, who's an expert, basically it can be an engineer, gives a advice to a user. User can be, let's say, a shareholder, or user can be a property buyer. I want to buy a property, and this is the example I took in the class, that let's say I want to buy a property. Oh, sorry, somebody wants to buy a property and I'm an ACCA. Oh, sorry, I'm an engineer. What would happen that this person who's looking to buy a property is not sure about the property safety. So he would consult me about, checking the property for him because I'm an engineer. I am an expert in, checking the safety of the property. I will collect evidences about that property. Basically, I will visit that property. I will contact the builder who has created that property. I will obtain all the necessary documents basically required to construct the property. Let's say fire certificate, certificate of completion for building, all the necessary approvals. I will physically inspect the building, all that thing to collect the evidences, and based on that evidences I will create my opinion, okay, whether this building is safe. I will advise the buyer accordingly, based on the advice, will decide whether to buy or not. I will not basically advise the buyer to buy the building. I will only advise the safety. Based on this, buyer will decide whether to buy the building from the builder, because builder will claim everything about the building, but buyer doesn't know whether this is true or not. So as a practitioner, as an expert, I am advising the builder basically whether this building is safe based on the evidences collected. Now, this is basically called an assurance engagement. Assurance engagement where a practitioner, or basically engineer, or a CA or a ACCA, a CPA, who's financial expert, who's and have any type of expertise, provide assurance, provide a opinion about a subject matter which is building to a user, which is basically prepared by the responsible party, which is builder. So this is an assurance engagement which we discussed. We took this builder example, try to help you understand what is the insurance. Then the basically the expert, the practitioner, will create a report addressed to the user about a subject matter, and this will be basically format like, we based on the evidences obtained about the building, that this building is safe or not, prepared by the responsible party. So this was an assurance engagement. This is just a overview. We did discuss it in detail. So I would expect you to complete that session. And if you already know about assurance, then you don't need it. Otherwise, this was what we discussed in the last class. And for other students who's basically joining for the first time, there are 5 critical elements: criteria, report, evidences, subject matter, three-party relationship. Three-party relationship is responsible party, the builder or the management. The subject, basically the intended user who wants to buy the building or who wants to invest the money in the company. Third is the practitioner who's going to evaluate the subject matter, which is financial statement or the building for prepared by the management or constructed by the builder. Subject matter is, or who we now understand, is could be the matter that basically practitioner will evaluate. Practitioner will evaluate against the criteria. What is the criteria? Minimum best practices. Basically, it could be standards of the construction. It could be standard for preparing financial statement, like accounting standard or financial reporting standard. Report, this is what practitioner provide the information and evidences. Basically, the evidence is collected by the practitioner during the basically practice, during the evaluation of project. These evidences are important. Let's say tomorrow, the opinion provided by the practitioner is not matching with the reality. Then in that case, user will file a case against the practitioner that why did you basically provided a different opinion. In that case, practitioner can claim that this is the evidence I received from the responsible party. If they have manipulated or forged, I couldn't have done anything about it. Because let's say in case of building, if the certificate of completion was obtained from the government, it was a proper document. It's just that it was given by bribing the government officials. Now I cannot do anything about it. Okay. Then we went on discussing this example, basically a grant given by a council to the sports school. Now, council is concerned whether sports school will be using this one for themselves or basically they would be using for the sports events that we have provided this grant or donation for. So for this, a public accountant will come, evaluate the report prepared by the sports school and see where the funds was used and then report it to the council member. Three-party relationship, council member, practitioner, and the board school organization. Where subject matter would be the funds used, basically the report prepared by the organization. Criteria would be whether funds was used for the purpose said. So these were the assurance we discussed. This is also we covered in the book till this part. We are through assurance engagement, elements of assurance, and basically examples. Let's today cover these examples to understand more about the assurance. Okay, let's start today's class. Screen is visible, everyone? Do let me know in case of any challenge, anybody? Other than last class topics that you have to cover from the last class session. Okay. Now, example. Like I said yesterday, statutory, wherever you see the word statutory, it means legal. So, statutory audit is an example of assurance engagement. Assurance providing confidence. So, I try to take side by side the company example. So, let's say a company, there is a company which is owned by shareholder, but if you know that company is managed by directors only. Company cannot be managed by shareholder. If there is a shareholder who wants to manage the company, then the shareholder himself have to appoint as a director. Okay, company will always be managed by director. So these directors are close to the process, so they know about the company, so they prepare the financial statement. Now, whether these financial statement are genuine or not, for that purpose, shareholder require company to have an audit. Because company is a company is registered as per Companies Act. That's why Companies Act made it mandatory over director to get the audit done. Okay, this is a mandatory legal requirement. That's why it's called statutory audit. And in our syllabus, we will continue to discuss the statutory audit only. I hope this is clear. Statutory audit is what? The audit of financial statement, basically the financial statement prepared by director for the company. Okay, we will discuss it in detail about agency issue, about stewardship. This is the basically main crux of this chapter. Once we go through that, we will continue this discussion in corporate governance chapter number 3. Okay, so this is so much to discuss in this statutory audit. Just to give you a context, statutory audit is nothing. Audit compulsory by law. Just simple as that. It is compulsory, it is not optional. The previous example we have taken, let's say this one and this one, this is a voluntarily audit where the user wants to get the audit and that's why they have appointed the practitioner. In this case, users are shareholder, definitely they want to get the audit. But to make it compulsory, law has itself basically mandated over director, basically the person who are managing the company, that please get your audit done for the shareholders or other stakeholders as well. What are the stakeholders? What are the shareholders? We are going to discuss that in a moment. Second, review of cash flow forecast, which will be presented to bank. I hope you understand that bank provides loan, okay? And bank try to provide loan to people who have a healthy financials. What it means that bank will provide loan to people who can repay them. That is the basically main agenda. Otherwise, if bank start giving loan to anyone, then in that case, bank will not be able to recover the money. This is what happened in 2008 financial crisis. If you know about 2008 financial crisis, this is exactly what happened. That people took the money, they bought the property. Later on, they were not able to pay because they never had the income. So bank provided loans to so many people. This created a bubble. Property market and the loan market both were crashed. And there was a recession basically there was a recession throughout the world. This was a very, very serious issue in 2008. So bank basically try to provide people loan who have a healthy financial. What will happen? Let's say current year, a company may have a profit of, let's say, $20,000. So based on that, company will project that in the future year, we have a profit of today 20,000. So it will be 25,000 in next year, 26,000 in second year. So we will continue to have a profit. This is called projection. Okay, projections. That today my profit is 20,000, next year 25,000, next year 30,000, 35,000. Based on the reasonable growth, they try to, project this. When they go to bank, they basically say, see, my profit is 20,000. So give me a loan of $50,000. Don't worry, I will be having cash flow on second year, third year, fourth year. And you know what? I will invest this money in my company. Now my profitability will increase to $40,000. So grant me this loan. Bank will charge some interest because bank, there is a risk. So bank will charge a higher interest in this case. So bank has some, incentive to provide the loan. That is why bank provides the loan to earn the interest. The problem is bank don't know whether these figures are authentic or not. So in this case, what can bank do? Bank can hire a practitioner, let's say me or you guys become qualified ACCA, bank hires you as a practitioner. What you will do, you will try to basically see the reasonableness, whether these numbers reported are reasonable, whether the growth rate is reasonable. How will you do that? Just to give you an example, let's say for past 10 years, company has a growth rate of 10%. So next year should be 22,000. Why this is 25,000? Why this is 30,000? As an example, there will be multiple methods. Again, you have to tell to bank that these are estimates. In reality, when basically actual results will come, it can be favorable or unfavorable. So this is an estimate. But we have tried to use our accounting knowledge, finance knowledge, and based on that, we provide a reasonable opinion, a reasonable assurance that yes, this seems okay, or this doesn't seem okay. This is the assurance we will provide. So this is a review of cash flow forecast, that what we predict for future. That let's say somebody is trying to take a loan. So we providing an assurance to the bank that yes, these numbers are reasonable or not. Okay, this is what bank will ask when somebody basically submit a report for taking a loan. Clear everyone? What is happening? Bank receive a report from a user, from a person that they want to take a loan. Bank wants to check whether this person has sufficient cash flow in the future. So for that, bank can hire us and basically get their financial health checked, whatever projections, whatever forecast they have prepared, whether this is correct or not. Okay, because bank don't know whether this person is saying truth or not. Clear everyone? So as a practitioner, we will collect evidences about the forecast, and based on that, we will provide our opinion. Okay, second, financial result for first half year. Let's say this is called interim audit. That if you go and check a company's half year result, full year results are not there. A company prepares January to December now, so full year results are not available right now. They will basically be available, let's say from January to December, company will be able to provide them by March. Okay, but for the time being, let's say Jan to June period has expired. In this case, company might provide their result, let's say by August. Okay, this is how things happen. So in this case, this auditor can come and basically this practitioner can come and check the result for first half year. This is also the assurance that we are trying to provide assurance to the users that yes, whether these numbers reported are correct or not. Basically, a review of threat which could affect business ability to going concern. We not only look after the financial issues, we can also look after the overall business operations, because in ACCA you not only learn finance, you not only learn accounting, but you also learn, let's say audit, taxation, you learn overall business, you learn business technology subject, you learn strategic business leadership. So you learn about business. So you can also see whether any going concern issue. How many of you are aware about going concern? Alok is asking statutory audit, basically practitioner informed to. No. Statutory audit means that the audit will be compulsory. That as a practitioner, I will check company's books of accounts, company's financial statement. Financial statement includes balance sheet, P&L, profit and loss, everything. I will check that. I will report it in a report to the shareholder and stakeholders. This is compulsory as per law. Okay, this is statutory audit. It is not that the information will be legal. The information will be official, and this will be submitted to the shareholder. Okay, this is annual requirement. In Companies Act, if you don't file a annual financial statement for 3 years, they are not get audited. In that case, director can be sent to jail. This is a compulsory requirement. Okay. Yeah, I'm talking about third point only. Third point is checking first half year result. First half year result means that your period is January to December. Okay, this is a full accounting year. Now, if you get your audit, if you basically check this is a statutory audit. This is normal audit. Or normal audit is basically 12-month cycle, but this is only 6 month. In this case, this normally happens for listed companies. They get quarterly or half yearly results. Okay, because they are listed in the stock exchange. Nobody waits for full year to know about company. They get a quarterly or half yearly result depending on the requirement of the stock exchange. In this case also, auditor would come and check the number for first 6 months. Okay, this is also half yearly results. And this is mainly for P&L account, because P&L is period wise, balance sheet is as on date. Right, Alok? Now, okay. Now, fourth point, the basically going concern issue. What is in going concern issue? Okay, what we are saying, that whether company will continue, whether company will continue its business. Company will continue its business. Okay, this is going concern is that company can continue its business in the foreseeable future. Means for next 12 months, company can continue, or will it go bankrupt? So this is what we as a practitioner will check, whether entity has a ability to continue. Some examples can you give, like how we can check whether company will continue? Let's say company has too much loan. That means company is too much geared, or company is too much leveraged. There is too much loan, so interest cost will be higher. Maybe if company doesn't earn any profit, maybe company will not be able to pay the interest. So there is a risk. There is a possibility that company might go insolvent. What if, let's say, company key director, the person who's running the company, leaves and go to the competitor? All the know-how, all the secrets of the company will be going to the competitor. Let's say company is selling rice. This has happened in India, that recently government banned basically wheat and rice export ban, where the company who were exporting wheat and rice they were exporting to outside countries. The ban was put by government. Suddenly operation haltage. Now operation is halt. Now what company will do? There is a going concern issue on this company. So what will happen, that sometimes shareholder, company, any stakeholder can require to check whether company is going to be going concern for the next foreseeable future. That company will be able to continue its business. It can be due to financial or non-financial factor, anything. Okay, as a practitioner, we will try to check the health of the company from all the angle. Okay. Review effectiveness of entities' internal control. What is internal control? That makes sure that everything is smooth. Let's say production is on timely basis, that there is no fraud, there is no error. Internal control purpose is to make sure entity keeps running smoothly. So whether internal control are effective, let's say there is a cash collection. There is a cash collection process. So the employee who's collecting the cash, what if they don't generate the invoice and they keep the cash in their pocket? Company is losing the money in this case. So this could be a case where entities' internal control are weak. So what can happen? The director, shareholder, anyone would basically ask practitioners assurance engagement that please come and check the internal control of the company, whether they are effective, whether they are able to prevent any fraud or error. Let's say my production is running, whether I have sufficient material in my go down. What if there is no inventory and suddenly my production stops? I will not be able to sell to my customer, and because of that, customer will be demanding and they might go to my competitor. There is a risk of business. So please check the internal control, whether my production will be running if I am not present, or it will continue requiring some monitoring. So whether internal controls are there to make sure that things are smooth. Okay. And then there could be corporate governance, environmental issue, contract, and other legislation. These are type of other assurances that what if board of directors are running the company properly, what if there is a environmental issue, what if companies sending the wastage in the contaminated water, and government will come later on in the future. So is there any issue with the company? So assurance engagement not only relates to financial but also non-financial areas. And as a practitioner, we will use our business and accounting knowledge to provide the report or opinion on that in a report to the users, whoever the users are, whether government, whether shareholder, whether director. According to that, we will basically provide the opinion in a report. Okay. 1, 2, 3, 4, 5th. Second point, we covered the second point, na? Cash flow forecast Alok. What is the query in the second point? Can you help me? Okay, I'll repeat the fifth point, Himanshu. Let me just help you. What is happening? Let's say my production line is dependent. Let's take an example of Walmart. Walmart is basically a mall which has global access. Every person can go and buy any inventory. They have basically shoes, clothes, everything. Walmart has almost everything. Okay, so you can go and buy something here, right? What if you go there and you don't have groceries available? So Walmart has a risk of inventory shortage risk. So what Walmart will do? Walmart will try to get as much inventory as possible, that they will try to fill their go down. But the problem will be if you hold too much inventory, it will cost to inventory holding cost, right? Too much capital will be invested in inventory and that will be stuck unless it is sold to the customer. Now you are basically bearing a risk of inventory shortage. At the same time, you are bearing a risk that that inventory will be hold too much and you will have too much capital invested. You will lose interest on that capital. So what Walmart has to do, they need to check that their system is sufficient enough. Okay, this is the line. This is sufficient enough that make sure that they have sufficient that they have proper level of inventory, that they do not run out of the stock and they do not hold too much excess inventory. This system that makes sure, let's say, whenever inventory level is going down, suddenly a red alert is sent to purchasing department. Purchasing department send the purchase order to the basically supplier. Supplier fill the goods in the go down. This is a system. Whether this system is running smoothly is called internal control. So we, as an auditor or as a practitioner, as a assurance engagement partner, will go there and check whether these controls are working. This is for production area. We can also look for controls for, let's say, financial area. That, let's say, invoicing system. What if a customer is charged twice? Is it happening? What if, let's say, payment is not made to supplier on timely basis? Is it happening? So these are some financial controls. So we will check financial, non-financial control, whatever work is given to us. Okay, the purpose is to check whether system is working properly. Okay, Manshu? This is called internal control review. Internal controls, things that help us keep running the business smoothly. What if they are stopped working? They have shaken. Let's say security guard is there. That helps, that prevents anybody who's not authorized to access. Okay. But what if security guard goes on leave and nobody's there to guard the company? Then people who are not authorized will also come to the company. So that is whether this control is failing. That is what we are checking here. Okay, Manshu? Okay. Alok, I'm unmuting you. Please let me know your query. Alok, please go ahead.
सर वो सेकंड पॉइंट का जो एग्जांपल आपने बताया ना बैंक लोन वाला वो नहीं समझा.
Okay. What is happening, Alok? Let's say you are an auditor. Okay. Please reply me. You are an auditor and bank has approached you for, let's say I have applied a loan to the bank. I want a loan from the bank. Here, I have basically given my projection that for next 6 months or for next 6 years, this will be my profitability. Currently, my profitability is 10 lakh. Next year, it will be 20 lakh. Third year, it will be 40 lakh, 50 lakh. Bank has approached you, Alok. Basically, please check whether the report submitted by me is genuine or not. That the projections I'm, basically providing is accurate. Okay. Okay, Alok, this is what basically the cash flow forecast review will be. Your work will be to check whether these projections are reasonable. And how will you check? Just an example, you can do the analytical procedure. What is analytical procedure? We'll discuss later. But just to give you a hint, you will look at my past history. What was my growth? Let's say if my profit earlier was, let's say 5 lakh. So is it now 10 lakh or is it just 5 lakh, 6 lakh? So if my growth was 5 to 10%, now how am I claiming that current year profit is 10 lakh, then next year profit will be 20 lakh? It's 100% jump, na? What is the reasonableness of this 100%? Okay, so this is what you will check for. You will submit this report to the bank. Clear, Alok? Now, corporate governance, environmental issue, contracts, and other legal, basically, I'm holding it for chapter number 3. This is something we will discuss in next chapter. Okay, what will happen that corporate governance require, just to let you give you in context, corporate governance basically means good governance. What is good governance? That companies run effectively. It includes that if there is a risk to the company, that is managed. Basically, let's say company is managed by the director, so they are truthful and faithful. They don't get into any manipulative practices. Third, they consider all stakeholders. What are stakeholders? Shareholders, creditors, customers, employees. They basically take everybody's voice. Okay, they take everybody's concern. That is a good corporate governance. Okay, example would be, let's say, Tata. Tata is considered Tata is considered one of the good corporate governance company, right, Ekta? They also take care of the employee. They are also, very good relationship with their suppliers. They are also, very good healthy relationship with their shareholders. They provide, money to them, a good return to them, reasonable, stable return. They basically provide a job security to the employee. So this is considered very good corporate governance. Basically the board of directors of, Tata Group, especially when Mr. Ratan Tata sir was there, this was always considered very ethical. Right, Ekta? Because they had this corporate governance, good corporate governance reputation, right? Okay. Basically, it includes financial aspects as well. I'm just right now giving you an overall example. Okay. Now, what are the benefits of assurance based on this discussion? That first of all, assurance will be provided by an independent party. Who's the independent party? The practitioner. The practitioner. Practitioner will be an independent party. Why independent? Because practitioner is not a related to the director, to the, let's say the engineer is not a relative of builder. Otherwise, if let's say engineer is the brother of builder, do you think that engineer will provide a unbiased opinion, an independent opinion? So for that purpose, engineer has to be a third party that has no relation with the company, no relation with the director or the builder. In this case, they would be independent, and that's why they will be giving a third opinion. Let's say you and I get into dispute. So if we go to a third person who don't know us and we try to give our own opinion, basically we'll try to tell them our side of the story. So they will listen both of us, and based on that, they will give an independent judgment. But if we, go to a common friend, then in that case, common friend will be conflicted. Okay, if I take in favor of Mr. A, in that case, Mr. B would be, would get angry with me. And if I give any opinion in favor of Mr. B, then Mr. A would get, angry. So in this case, this would be a conflicting situation. That's why it is always best that you get to a third party which is independent. So reasonable assurance, first of all, is done by an independent party. And because it is an independent party, the credibility, the confidence of the user enhances. Yes or no? It enhances the confidence of the user. It reduces the management bias. Management bias, that management may try to overstate everything. Let's say builder is claiming so many things about the building. So in this case, the practitioner checking this with evidences can only confirm, and that reduces the management bias. Management bias is that management will be exaggerating things or maybe hiding things. These can be manipulative. So not to be manipulated, not to be biased, basically third party opinion, reduces this. Non-standard or modified opinion draws attention to risk. What it means, this modified line I have to explain from chapter number 20 reference. What this is saying, that if practitioner says, no, I didn't find anything okay, suddenly people will come to attention. Why? You builder was claiming this is a safe building, but practitioner said, no, it is not a safe building. That means something is definitely wrong. Two people having different opinion. Definitely builder will say, no, engineer doesn't know anything. But this bring people attention. Suddenly the moment practitioner said, no, I don't think that this is true, that is the very moment everybody will bring their attention. So practitioner saying that builder or the responsible party is not saying true. Basically, in modified opinion means they say that okay, whatever is claimed is not correct. In that case, everybody will be paying attention, will be drawing their attention to the risk of false statements. Relevance of information is improved because expertise and knowledge of the assurance person. Definitely, the engineer is an expert person. If they are saying that building is safe, definitely we are getting a expert opinion. Just a quick example. Let's say I am nobody and I start basically providing opinion whether Virat Kohli will score a century. Doesn't mean anything. But what if Sunil Gavaskar, Sachin Tendulkar, or any famous cricket player comes there and they provide commentary whether today Virat Kohli will score a century? This provides a best assurance. This provides confidence of the user because these people are expert. They know better, right? So this is an expert knowledge. Just in case anybody is not aware about cricket, maybe you can take a football example, Ronaldo or Messi basically commenting about a player. That gives you a assurance, a confidence about the whether player will be scoring better or not. Right? So this is the expert advice. Again, if not clear, then maybe a doctor advice. A doctor is an expert now, they're providing any medical advice. That is also expert advice. So clear with this? Benefits of assurance and examples of assurance engagement. This is exactly what we discussed. Don't worry if you are not able to get any example today. By the end of this chapter one na is introductory chapter. The problem with this chapter is that if I start discussing something, it will open other chapters. Okay, so if you're not able to get it today, don't worry. Other chapters, when we will be discussing till chapter number 12, you will be through with the audit. By chapter number 12, all your concepts of audit will be cleared. So once you come back, these things will be much, much clearer to you. Okay. So far, anybody, any question, any doubt? We are fine. The speed is okay. All clear? All good? Right? Now, there are two types of assurances. One is called reasonable assurance. Second is limited assurance. Okay. Let me clarify this. This is pending. This is pending. Like I said yesterday, this is basically entire audit syllabus. Okay. We will discuss this once we are through with chapter number 11, 12. So this is entire audit syllabus. I don't want to start this page. This will, take me another 2 to 3 classes just to explain this page. And then I will be spending another classes to, take up the concepts. So I don't want to waste time here. Okay. As we know, you can see the word assurance. Assurance is providing the confidence to the user, okay, by the practitioner about a subject matter prepared by the responsible party. This confidence will be provided basically this opinion will be provided in a report by the practitioner to the user about a subject matter prepared by the responsible party. You can see this word is assurance. It is not a guarantee. Okay. Assurance is providing confidence, not giving any promise, not giving any guarantee. It is not a guarantee, it is not a promise. It is a assurance. Okay? So assurance is of two types: reasonable assurance and limited assurance. Basically, two category where what we say in assurance. Uh, 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 let's say reasonable and limited. Okay. Let's say there is a basically student. There is a student. I use the wording that this is a bright student. This is a he or she is a bright student. I'm giving my affirmation. Okay. Second statement, I'm saying I don't know. I didn't find anything problematic in him or her. Basically, this is my statement about a student, okay, whether the student is he or she, that the student is very bright. Okay, according to me, the student is very bright. This is my statement number one. Statement number two, I say, you know what? I didn't find anything problematic with this student. Okay, the way the time I spent with the student, I didn't find anything problematic. And in the first statement, I'm saying, the time I spent with the student, I feel that this student is very bright. I'm not saying anything negative. I'm not saying anything negative in both statement. Okay. Nothing negative here. It's just that here I am very positive. Okay. I'm trying to, praise the student. But in the second one, I'm holding or reserving my opinion. I'm trying to give as little information as possible because I don't know. I didn't find anything. So what is reasonable? Reasonable is basically showing confidence. Okay. In unlimited, you are just saying, okay, there is nothing wrong. So saying something positive or saying, no, I didn't find anything wrong. These are two different opinions. Definitely in reasonable, when you are saying, you are showing confidence, the level of investigation or level of, judgment will be very high. Okay. Here, judgment level will be very low. Let's say I spend the time with the student will be very high as compared to in limited time, very low time. Right? Because only with a long experience, I can say, no, this is a very bright student. And only with a very, small, limited time, I can say, no, I didn't find anything wrong. So limited is a lesser level of assurance and reasonable is a higher level of assurance. Okay. So what is reasonable assurance and what is basically limited assurance? A reasonable assurance provides high but not absolute because assurance is not a guarantee. Okay. So whether it is reasonable or limited, it is an assurance. So it is not a guarantee, first of all. So if you just remove this, it provides a high level of assurance that yes, things are good. In limited assurance, we say, I didn't find anything wrong. So I'm not saying this is great. I'm just saying I didn't find anything wrong. Okay. So a reasonable assurance engagement provides a high level of assurance, basically increases the confidence. It gives a reasonable assurance, a significant of testing and evaluation. What it means, you have spent a significant time collecting evidences. You have significant time investigating the matter. That is testing and evaluating. Okay. You are trying to test in every possible scenario. That is why this is reasonable. And here there will be limited procedures, limited testing, limited, limited investigation. That is why you're saying I didn't find anything wrong. Okay. This is normally done by external auditor. Basically, external audit or statutory audit is an example of reasonable assurance. Let's say cash flow forecast. Cash flow forecast will be an example for limited assurance. In external audit or in a statutory audit, we do a detailed checking. We check books of account, balance sheet, basically so many things. In cash flow forecast, we are only checking with the projections, that whether projections are reasonable, whether the cash flow today predicted is accurate. That is what we are doing here. So here, only little bit of calculation, only comparison with the previous year. Here, checking invoices, getting documentation, finding evidences, there will be lot of details things. So reasonable assurance will always be higher than the limited assurance. In reasonable assurance, we will be checking facts, we will be finding evidences to see whether the statement provided is correct or not. In this case, we will just do some random calculations trying to compare with the past data, nothing else. We'll not check the accuracy of the data. We'll only check the data and the past trend. Here, we will check even the accuracy of the data. So that we get a confidence here, higher confidence that I can say, yes, this is a good student. And here I would say, no, I don't know. I didn't find anything wrong with this student. Clear about reasonable assurance and basically limited assurance. This is called a positive assurance. This is called a negative assurance. Negative assurance means I didn't find anything negative. It's not like I'm giving a negative opinion. I'm just saying that no, I didn't find anything negative. In this case, I'm giving a positive assurance. Yeah, this student is good to go. Clear? Because, okay, Alok, let me unmute you. What is your question? What is your question, Alok?
सर कि जैसा कि आपने कहा कि यहाँ पे हमें रीजनेबल एश्योरेंस के अंदर हमें ये बताया गया है कि वो ब्राइट स्टूडेंट है, बट उसके लिए लॉन्ग प्रोसीजर्स क्यों लेना है जब वो ब्राइट ही है तो हमें इतने सारे।
How do you know that he is bright? He or she is bright. How do you know that? By spending long time with them, na?
बट सर अगर उसका कंपैरिजन हम लिमिटेड एश्योरेंस के साथ करा जाए तो उसमें क्यों कम प्रोसीजर्स ले जाएंगे।
That is why it is limited because I didn't spend much time there. See, reasonable and limited will be depending on how better you know the person, right? You can only give a reasonable opinion about something that you have spent good time with, good investigation, good, checking, good testing. Whereas if you have not done, much checking, you have not checked, in very detail, then how can you be absolute sure? That is what I'm asking you.
ओके ओके सर।
Got it?
ओके सर, यस।
So this is the reasonable assurance and limited assurance. Please read them once and let me know in case of any confusion. Okay, what is reasonable assurance? What is limited assurance? Statutory audit, or also known as external audit, is a reasonable assurance because this is required by law. So we check them in detail, and that's why we provide reasonable assurance. Basically, cash flow forecast is not compulsory. It is voluntarily. So in this case, checking level is very limited. Read them and let me know in case of any confusion. External or internal audit, this will be chapter number 4. What is external auditor, internal auditor? Just to let you know, external auditor is a third party appointed by shareholder. Internal auditor is an employee of the company. Now, first of all, we have to discuss the company, then you will get a better understanding of this reference. Okay, look. External auditor, internal auditor is a detailed concept. We will be covering external internal so many times, you would not, believe. So it's a detailed concept, don't worry. Sure, Ekta.
या हाय सर।
Hello.
सर मेरा एक क्वेश्चन था, जैसे फॉर एग्जांपल हमारे जो लिमिटेड रिव्यूज होते हैं, जैसे क्लाइंट ही बोलते हैं कि हमें लिमिटेड रिव्यूज कराने हैं, जैसे लिस्टेड कंपनीज में वी हैव कंडक्टेड अ लिमिटेड रिव्यू, तो वो मेरा लिमिटेड इंश्योरेंस के अंदर आएगा या फिर रीजनेबल इंश्योरेंस के अंदर आएगा? इट
Yes,
विल बी
normally it
अंडर
would be limited
लिमिटेड।
assurance. Normally it would be limited assurance.
ओके एंड सर वी आर टॉकिंग अबाउट हेयर द इंश्योरेंस, सो यहाँ पर जो हमारा इंटरनल कंट्रोल्स की टेस्टिंग होती है, वेदर इट इज ऑपरेट इफेक्टिवली और नॉट ओवरऑल द लाइक आपका प्रोसेस इज, सो दिस विल बी इंश्योरेंस ना, बिकॉज ऑडिट में तो वी हैव टू परफॉर्म सब procedures, like we have to be confident among the numbers they are reported in the financial statement and P&L, so this is a different except that assurance na.
Right. Basically, this could be reasonable, this could be limited depending on the detail of the procedure. Limited and or basically reasonableness will depend on the detailness, how much detail you went for the checking. Now whether it
Okay.
is whether it is basically the let's say this is a financial audits are normally financial assurances are normally audits, basically
Okay.
audit of the financial statement. This is an internal control assurance, that's why it will be internal control engagement. But if it is part of statutory audit, then it will be audit. Okay. Let's say I'm doing a statutory audit annually, and for that I have to check internal control, then it will be part of audit. But if I have to just separately check the internal control, it will be just in insurance. Okay, Ekta?
Okay. Okay. Okay, sir. Thanks, sir.
Thank you. So I hope everybody is clear with this, right? So these are summary, and with this we are through with the assurance concept. Now we will come to the statutory audit. Now before starting the statutory audit, I have to clear your concept about company. I know ideally you are at skill level, so you must be clear with stewardship, agency, and all these issues. But I know how students are because I have been a student myself. So I will be covering this. So type of engagement, basically, in one is reasonable assurance, one is limited assurance. Review of cash flow forecast. I have given the same example. Statutory audit is here. So you will get a detailed checking. This will be basically reasonable assurance. You will only check limited evidences. This will be a limited assurance. Their purpose is basically different. This is where positive assurance is given. This is where negative assurance is given. One question I was expecting, why somebody would opt for limited assurance? Well, the reason is very simple, that audit or assurance is a costly business. If you go in detail, if you go in, detail reasonable assurance, then it would be costly effect. And it is not, like 1 lakh, 2 lakh. It's a very, very costly thing. So that is why when we talk about, reasonable assurance, it is done really by company, because it is compulsory for the statutory audit. It is compulsory as per statute. So that is why we do the audit annually. Otherwise, people don't like doing audit, especially management don't like doing audits because they disrupt the business. You have to stop processes, you have to cater the auditor, and this is what management don't like. Many people don't find audit very useful, and that is why audit is done, why audit is required. We are going to start basically very important concept, which is external auditor. Why audit is done, why companies requires us to do the audit. But for this, first of all, let's clear with your concept of agency issue. If you are clear with the agency issue, then it will be very much clear to you. If not, then it will become a theory to you. So let's first of all clear your agency issue, your stewardshipness, and basically what is the difference between director and shareholder. So can anyone who wants to explain me stewardship and agency? What is accountability, stewardship, and agency? Why this is explained in detail? No, why does it explain in detail? Basically, why this concept is given at audit. This is a company's act, basically concept. A reasonable assurance means, okay, Alok, just think. Assurance is providing confidence. Reasonable assurance is a detailed checking. Limited assurance is a limited checking. So when we talk about statutory audit is a reasonable assurance. It's not a guarantee. Assurance is not a guarantee. So when we go with the Companies Act, we go with the statutory audit, we go with the reasonable assurance, that please check everything in detail. Clear, Alok? Okay. Yes. Shubham, just give me a moment. I'm unmuting you. Shubham. Yeah. Please go ahead, Shubham. Explain what is stewardship, what is agency.
For stewardship theories, the directors of the company, they act as a steward for the shareholders. Means they work for the capital shareholders invest in the business and make sure that their capital is protected uh, and it's in the good hands. Basically, means they act as a workers for the shareholders, as a steward.
What you are trying to say is that director act as an agent and shareholder
Yes.
hand over their money, and this is the responsibility of director to basically protect the interest of the shareholder, right?
Yes, sir.
Okay. Reasonable enough. Okay. What Piyush is saying, so reasonable assurance is more reliable than, definitely. Reasonable assurance is reliable more than the limited assurance. But Piyush, reasonable assurance or assurance in general is not a guarantee. You cannot blindly basically rely on the reasonable assurance. Be it any type of assurance, reasonable or limited. You cannot blindly rely. You have to read the report prepared by the practitioner. In the report itself, practitioner says, please understand this is a limited assurance and not a guarantee. Okay? Even this is a report. This is a report we are going to discuss. We are at the report. You can see this line. Just focus where I'm telling you to focus. Reasonable assurance is a high level assurance, but it is not a guarantee. This is what practitioner write in their report. Please take your own, risk. This is a reasonable assurance, not a guarantee. Because we have collected evidences. Evidences provided by the management or the, responsible party can be manipulated. We cannot test that. There is no way checking it. If somebody is committed to commit a fraud, in that case, this is very difficult to, identify. Error can be identified, fraud is very difficult. Okay, this we will discuss later on. Okay, so coming to the topic. See, should I? Yeah. Just a second. Let me see where should I start this from. This example always confuses student. This time I will not take this example. Those who know, company is basically a limited liability. Limited liability. What is a limited liability? That if company has 10 crore asset, why companies are formed, why people don't run the company in their own name, why you have to have a company limited, let's say Reliance Limited, Tata Limited, or let's say in case of UK, if it is a public company, it will be, let's say, Tesco PLC, public company, or let's say Tesco Private Limited. Okay, in India, we have a concept like, let's say if I want to call a company, either I will call it, let's say Reliance Limited. This limited shows that it is a public company. If it was Reliance Private Limited, this showed it was a private company. This is as per Indian Companies Act. But in UK, if we want to see a company which is public, we will see, let's say Tesco, a company name I remember is PLC. Tesco PLC, or it will be Tesco Limited. Okay, when you say Tesco Limited, it is a private company in UK, and when you see PLC, it will be a public company. Okay, now coming back to the concept. Company is limited. What limited means? That the liability of the company will be limited. What do I mean by that? Let's say 10 crore assets company has, and it has taken, let's say, 5 crore loan. So tomorrow, if company becomes insolvent, and these assets are sold, let's say 7 crore, because maybe assets will be sold at 10 crore, maybe at 7 crore, or maybe at, let's say, 4 crore, whatever is the situation. If these assets are sold, first of all, loan will be paid 5 crore. Okay, let me take another example. It is a 10 crore asset and company had a 15 crore loan. Okay, 15 crore loan. This is the borrowing of the company. This is borrowed money. This is company's assets. Let's say company plant, company land and building, everything. What happened if, let's say, this company becomes insolvent? This company is not able to, generate sales. So company becomes insolvent. If company assets 10 crore are sold, then 5 crore are remaining as the remaining amount for the basically bank or let's say creditors. Bank has provided this 15 crore loan and 5 crore is remaining. Now, whoever owned this company, let's say this company was owned by any shareholder, Mr. A. Now, in this case, bank cannot go behind Mr. A and sell his personal assets. Okay, personal assets. This is not allowed because company was limited, means company had a limited liability. In this case, if company only had 10 crore asset, then bank should have been careful. Bank should have been careful when they have provided the loan. So it is not fault of Mr. A and his family that now you will go and sell his personal assets. This is not allowed. Unless Mr. A has committed the fraud, unless this is a fraud case, it will not be allowed. So you see that why these limited companies are formed. Let's say you can see that there is a Reliance Oil company, Reliance Oil Refineries, and Reliance Communication. Okay, both are different company. Why these big giants open different company? This is for the limited purpose. That let's say if Reliance Oil Refinery, touch wood, this is just for an example, just to explain. Touch wood, it doesn't happen, just in a good faith. Let's say Reliance Oil Refinery had a blast in the sea. Okay, this is just an accident happens, people die, and the water gets contaminated. The cost is, let's say, 2 lakh crore. Okay, 2 lakh crore. Reliance had a value of 1 lakh crore. So Reliance will not be able to pay their amount. Yes or no? Everybody. Here, Reliance Oil Refinery will not be able to pay this amount. Okay, again, this is just in a good faith. Huh? So what will happen? Let's say Reliance Retail. It had a, let's say good lot of assets. Let's say 5 lakh crore assets. So can the bank or the people who provided the 2 lakh crore loan to Reliance Oil Refinery, can they go to Reliance Retail and basically try to sell the assets of the Reliance Retail to collect the remaining 1 lakh? Can they do that? Both are owned by Mr. Mukesh Ambani. Tell me whether this is possible. Whether Reliance Retail shares can basically assets can be sold to basically collect this remaining 1 lakh amount. I hope you understand this is no. Why? Because company was limited. Company only can be claimed up to their asset. That is a limited liability concept. That is why Reliance Limited cannot be touched. Mr. Mukesh Ambani cannot be touched unless Mr. Mukesh Ambani was held responsible for any fraud or for any negligence. In that case, there is a concept called corporate wheel. That corporate wheel will be lifted. Mr. Mukesh Ambani will not be a separate individual than the company, and in that case, Mr. Mukesh Ambani's assets will be seized. Okay, this happened in Mr. Vijay Mallya case. Vijay Mallya, once before he was considered, before he was, he went to the UK and he basically ran off. What happened? He owned the Kingfisher. Okay, so Kingfisher had a loan, let's say 10,000 crore. So unless Kingfisher was considered insolvent, okay, Mr. Vijay Mallya cannot be touched. Mr. Vijay Mallya could not be touched here. Why? Because Kingfisher was a limited company. And this is the reason we are studying this. This is the reason we are studying that, let's say, people like Mr. Vijay Mallya, okay, Mr. Vijay, they know, okay, if company becomes limited, in that case, I can take loan in the name of company, any amount of loan, let's say 10,000 crore. And let's say asset of the company are 5,000 crore. Now tomorrow, if I'm not able to pay that, so what? Company is limited, bank cannot touch me. That is why corporate wheel is lifted. Corporate wheel is lifted. That company is not basically have a separate legal entity if it is a case of fraud. Otherwise, it will always have a separate legal entity. Company will be an artificial person in the eye of law. Okay, company will be different, owner will be different. But if there is a fraud, there will be corporate wheel lifting. There will be no separate person. Vijay Mallya will be personally responsible. I hope this much you already know. This is just a revision for you. Right, everybody? No, doesn't matter if it is a public or private. Doesn't matter. It is a limited company. It has a limited liability. Okay, Saurabh? Okay, limited means limited liability up to the assets of the company. Now, because it is a very powerful thing. It is a very powerful thing. This limited concept now is a very powerful thing. Don't you think that great powers, like Mr. Uncle Ben said, great powers comes greater responsibility? Yes or no? Yes. So that's why these companies were forced to have two things. First of all, they will be run by directors, not shareholders. Second thing, these directors will prepare annual financial statements. These annual financial statements will be about performance of the company. which they report to the shareholder and other stakeholder. Let's take an example. Now I think this example will be clear. Veera was an entrepreneur. Okay, Veera basically set up a business selling flour. Okay, what happened? She used to sell the flour. This is a story that Veera used to sell flour, everything, and her basically business was profitable. She was getting some income from the business. Okay, she needed some capital. Veera wasn't basically a normal people just like you, just like me, not you. You guys must be very good. Basically just like me, she was very normal person. She didn't have much money. She wanted to, expand her business. But to expand business, you need money, right? She needed a car to transport flour from one place to another. She needed to hire employee to, place those employees at those place because Veera cannot be everywhere. So what happened? She needed money to expand. So she decided to ask basically a friend, Peter. Peter is a rich person. So Peter will be the shareholder. Okay. Peter actually found Veera idea very good. Peter thought, okay, Veera is making profit. So why not let me, invest in Veera? Veera will be running the company. Okay, as an employee. Okay, because money is mine. So Veera will be, I will hire Veera as an employee. Okay, Veera will be employee, Peter will be the shareholder. So what happened? Peter basically see the potential and decided to invest in the Veera. But because Peter doesn't want to be involved in the management, that is why basically company when formed, it was required that it is basically run by director. Why? Because shareholder, let's say Peter, he doesn't know how to sell flour. He's not an expert in selling flour. So it was driven as a concept that why not, let the company managed by people who knows how to do that. Let's say you have your own money, you want to, run the company by your hand. So in that case, open the company and appoint a self-director. Now you will have two capacity, one as a shareholder and one as a director. Okay. Mr. Mukesh Ambani, he owns the Reliance. We all know that. So in this case, he's a shareholder of the Reliance, one of the biggest shareholder. But at the same time, he's also the director. Elon Musk, as an international example, he is the owner of Tesla and SpaceX. We know that. He is the major shareholder of the company. But at the same time, he is the director of the company. So he's acting in two capacity. CEO, the director, the person who's responsible for managing the company, and as a shareholder. Clear everyone about this? Any confusion? Who's the director? Who's the shareholder? Why directors are appointed? Now, what happens later? Everybody clear now with this? No, basically silent chat right now. Hello. Yes. Please keep responding. This helps me. Okay. Now what happens? Basically, you can see Peter doesn't wanted unlimited liability. So that's why he was smart. So he opened a company, right? So he opened a limited company. Peter was smart. So if you want to open a business, please don't let your personal assets get attached. Always open a company because your liability will be limited. Definitely there will be cost. There will be cost of running the company, but limited liability is always better because if there is a legal claim, anything, then your company, you will not be able to, no one will be able to, claim or, any liability will not be more than the assets of the company. That is why it is a limited company, unless you commit a fraud. Let me remind you. He will own the majority of the share and be entitled to dividend. Veera is managing director of the company. So what has happened so far in our story? Peter is the shareholder because he had money. He didn't know how to run the business. So he opened a company. The liability will be limited and this company will be managed by Veera because Veera knows how to sell flowers. So Peter invested, let's say 10 crore. Okay. And he expected, because he saw the potential, he expected 2 crore profit. For this, he paid Veera, let's say 50 lakh salary annually. Now what happens? Once the results are out, let's say 1 year pass and the results are out. Peter was expecting 2 crore profit. But you know what happened? Company only generated, let's say 60 lakh. Peter was disappointed. Why this 60 lakh is there? He asked Veera, why you only generated 60 lakh? You basically, I thought that this would be a 2 crore profit. Veera said, you don't know, Peter, how business is run. You are not basically understanding this. I had to, do multiple things. And you know what? I'm running the company. So I know better that this will be only 60 lakh. Now, Peter is disappointed that why the company is not, making profit the way it was promised. So Peter is not sure that this financial statement, which is saying, let's say P&L, prepared by the Veera, is it accurate? Or is Veera basically prioritizing Peter interest as a shareholder or prioritizing her own interest as a director? What if the salary that Veera is getting, she is not working because she is getting basically the compensation, so she doesn't care? Or what if these numbers are not correctly reported by Veera? What if the money is taken by the basically Veera or in her own pocket? There can be chances now because Peter doesn't know. Peter is not involved in the business. Peter is not involved here. That is why this creates an agency issue. This Peter is basically the principal. The shareholder is the principal. Okay. And Peter appointed Veera to run the company as his agent because agent is responsible to act on behalf of the shareholder or act on the behalf of the principal. So here Veera should have acted in the interest of the Peter. But problem is because Veera is getting her compensation of 50 lakh annually, so she is not concerned with financial of the company as long as she gets the salary. Whether company becomes profitable, whether company achieves their target, no. Veera is only concerned with the salary. That's why this creates an agency issue because agent is there. They are supposed to act in the interest of the principal, but what if they don't? That's create an agency issue. Okay, this is basically an agent. If you have seen the Matrix movie, you know this person. This is Agent Smith. Agent Smith is a rogue agent. Basically, he doesn't act in the interest of the system. He acts for his own interest. That is basically the agency issue. Agency issue. That says that maybe director are appointed for the shareholder. They run the company for the shareholder. But what if they only basically concerned with their interest? That is the agency issue. So people employed are used to provide particular service. Basically, in case of company, it is the director who provides the service of managing the business. Okay. The second role is trying to maximize their personal wealth, basically because they are earning salary. At the same time, they are maximizing the shareholder. That is what we assume. But because they might, prioritize their interest, there is an issue of, mismanaging the company, misusing the funds of the company, not protecting the assets of the company. That is basically could be a problem. However, there is a different theory, which is called stewardship. Steward, you can see this is basically the waiters or basically the people who take care of your, is known as stewards. What is the concept of steward? Let's say you go in a lobby, you go in a, let's say, in a hotel. So a steward will come, he will take care of your car, and basically the way he will manage your car is like it is his own. He will take proper care of her. And that is the concept of stewardship. Stewardship says that I will be taking care of your assets the way I'm supposed to take care of my assets. I will be fully obliged to you. So now these two basically theories contradicts with each other. One theory says, you know what, director will be creating an agency issue. One theory says, no, they will be basically acting in the interest of the shareholder. They will be acting as a steward of the company. So what happens? The directors, the people who are responsible for managing the company, are supposed to act as a steward, show their stewardship towards the company, but they might end up creating an agency issue. Clear, everyone? What is the agency issue? What is stewardshipness? Everyone, are we clear? Okay. Let's let it absorb. Let's take a 10 minutes break and then we'll be back. Okay. Clear now? So far, anybody any question? Yeah, Saurav. Let me unmute you. Where is Saurav? Yeah. Saurav, yeah, please tell me. We are taking, guys, who wants to take break? We are on a break. You can take the break. So Saurav, are you there?
Yeah.
So Saurav, what is happening? If, let's say you are the shareholder, you have the money, you have appointed me as a director. What stewardship says, when you have handed over this money, because you will not be managing the company, I am going to manage the company on your behalf. Okay, Saurav. So what stewardship says that I will be trying to maximize this money for you. because I'm your steward. I'm supposed to take care of this money. I'm supposed to protect it, that this money is not misused by anybody. And second, I try to maximize the wealth. I try to, make the production most efficient, try to, make the company profitable, make, basically the company wealth maximize so that you earn the money. This is stewardship. But the problem is, till this time, stewardship case, Swaraj?
Yeah.
Yeah. Now, what happens, Saurav, that money is handed over to me. What I will be getting in return, I will be getting a salary. Because I have a job security, or let's say I don't have any motivation, why should I basically put more effort? If let's say there is a target of achieving 1 crore profit, I will only achieve that 1 crore profit so that you don't fire me. Why would I go and basically put extra effort and basically make the profit to 2 crore? Is there any incentive? That basically is an agency issue. That I am only prioritizing my concern. I'm not concerned with you. That is an agency issue. Okay?
Okay. Yeah.
Clear now?
Yeah. Thank you.
Okay. So let's take a break, guys, and let's meet after the break. Yes, Alok. It will be coming later on in detail chapters. Okay. We are going to study audit throughout this syllabus. Are we back? So if you look at this graph, guys, are we back? If you look at this graph, what this is saying, an audit provides assurance to shareholder and other stakeholder of the company on the financial statement because independent and impartial. Okay, what is happening here? Let me just give you context. Company is owned by shareholder. It is managed by basically management. Shareholder can appoint themselves as management, or they can appoint a expert because this is their money. So definitely they want somebody expert to manage this. Management try to prepare the financial statement so that they can report the performance of the company to the shareholder. What are the basically financial statement, balance sheet, P&L, cash flow statement, statement of changes in equity, notes to account. I hope you know this because you are at skill level. So you know this minimum basically financial statements. This financial statement is a way of management to show their stewardshipness, that how their performance of the company was. Because shareholder wants to rely on this financial statement, that whether they are reliable or not, whether management has prepared with honesty, basically not biased any view, not exaggerating anything, not hiding anything. The shareholder appoint the independent auditor, basically a practitioner who will evaluate this subject matter financial statement based on the standards, okay, of the financial statement preparation, and then report it to the shareholder. So this is a reasonable, this portion is reasonable assurance, where auditor will be performing audit of financial statement for the shareholder. This financial statement prepared by the management, so auditor will try to collect evidences about this financial statement and create a conclusion based on those evidences and report to shareholder. Right? This graph is clear, everyone? This graph, company owned by shareholder, managed by the management, because these managements are appointed by shareholder to manage the company, let's say directors. This director to show their stewardship, prepare the financial statement. Shareholder want to basically get a reliance whether the statements are perfect or not. In that case, what will happen? Shareholder will basically appoint auditor, and this auditor will evaluate this financial statement on the subject matter. Alok, I'm going to unmute you. And then basically auditor will report based on the evidences collected from management to the shareholder. Yes, Alok. Yes, Alok.
सर एक्चुअली जो ये रीजनेबल एंड लिमिटेड एश्योरेंस जो ऑडिटर देता है, वो जो भी डिटेल्ड इंफॉर्मेशन रहता है वो भी ऑडिटर ही फाइंड करता है, जितनी भी डिटेल्ड इंफॉर्मेशन होती है.
Sorry, didn't get your question. What do you mean?
सर जो ऑडिटर इंफॉर्मेशन प्रोवाइड करता है यूजर को कंपनी के लिए, तो वो जो सर रीजनेबल एश्योरेंस की जो इन्फॉर्मेशन होती है, डिटेल्ड इन्फॉर्मेशन, तो वो भी ऑडिटर ही फाइंड करता है क्या सारी?
हाँ जी, बेसिकली what is auditor is providing? Auditor is providing a report. What is this report? Report about the accuracy, about the reliance of this financial statement, whether these are accurate or not. Right? So this is prepared by the management. Till preparation is the management work, director's work. When it comes to evaluating this financial statement, this will be the work of the auditor. Auditor will go to the management place, collect the evidences from the management, and then rely. Okay, let's say building example, building is prepared by the builder, but when it's checking is done by the practitioner, the engineer. Okay, Alok?
ओके सर।
So now once we have understood the basics, of the stewardship accounting, let's basically see the shareholder quickly. What are the stakeholders? Please understand, stakeholders are not shareholders. Shareholder are part of stakeholder. One of the stakeholder is basically shareholder who have invested their money. So people who have invested their money, they have a clear stake, clear interest. Stake means interest. So they have a clear interest of money they have invested. For employee, what is the stake in the company? Anyone? Basically the job security, the money they earn from the company, the health and safety environment the company offers to the company, basically to the employees. So they basically want to know, let's say, if we talk about financial statement, what is basically employee will be concerned of. Let's say this has happened, and this is very recent news, that board basically CEO fired employee and then got a bonus. CEO said, now we need to reduce the cost, let's fire the employee. At the same time, that same CEO got a fatty bonus. These are called fatty CEOs. Basically, they earn huge bonuses and salary. At the same time, they fire employee. This is not a good practice. So if you are firing employee because you need to save business, that is allowed. But you are firing employee just so that you get a business. This is basically very, very problematic, because in European Union countries, this is not basically accepted by regulators very likely. In US, in India, maybe this is allowed, but in European countries, this is not allowed. This is very, very risky. If you do that, penalty may be imposed on your company. Because why you fired employee if you were just getting the bonus? You are just shifting money from one person to many people to a one person. This is not allowed. So employees, basically, let's say you have a employee union. You have a union. So they might be interested in the financial statement. They want to see, okay, what is the profitability of the company, so that their bonus will be decided. That if company declares a very low bonus but the company profitability is very high, in that case they can protest why we are not getting bonus. So employee has a very, very direct stake, because they are working for the company. They will earn the salary. They have a job security issue with the company. So they have a direct stake or direct interest in the company. Management or director, they are the one who prepare the financial statement, but they also have the stake. Let's say if you have done BT, so you know that employees and directors are the internal stakeholders, the people who are working in the company. Right? So they have basically, they are in the inside of the organization, they are working, they both salaries, job security are dependent on the organization. So director is definitely also interested in the profitability. The higher the profitability, the higher the basically the bonus of the director. I just forgot the name of a director who's going to receive $100 million bonus. It is for a company. If anybody remember any aviation company, which is one of the cheapest aviation company. They provide you the cheapest, price, but at the same time, they charge you for everything. If you want to bring a luggage, they will charge you for that. And basically, the company director was offered that if they can double the price of the company, they will be getting 100 million. Nobody thought that this director would be able to do that, but this director actually did it. Now the price of the company is about to become double, and the director is about to receive this year only $100 million bonus. So in this case, this was a flying company. I forgot the name. This is one of the popular flying company in the world, and this is one provide them one of the cheapest service. But the customer complaint is so high because they charge you with everything. They give you the lowest quality services. Okay, so directors are concerned with the profitability because their bonuses, their salaries also dependent whether they will be hired again or not. Customers, definitely, let's take an example. Coke company comes, let's say I'm a manufacturer. Okay, Coke company comes to me and give me a contract of, let's say, 100 crore. So as a customer, Coke would be interested whether I will be able to provide the raw material to them or not. The necessary, let's say, this is the concept that many companies don't produce the goods themselves. They outsource it. Apple outsourced their phone in the China, if you know. Many company outsource their product basically in a market where labor is cheap. So they want to make sure that the basically company they are buying from, the supplier is having a good financials. Let's say I'm a person who has a lot of debt or I don't have any asset. Do you think Coke or large company will give me a contract? Because they will be put in the danger. So that is why customer is also interested in the liquidity of the let's say supplier, that whether they have sufficient liquidity to complete the project. Because what if they go insolvent? What would customer do in between? Okay, people like you and me, let's say we buy a phone, we are not concerned. We of the daily groceries we buy, we may not be concerned about the liquidity. But what about business to business? They work on credit. Customer is waiting for their goods to deliver so they can further sell it. So what will happen if they are not able to get the delivery from the supplier? So they need to know about the liquidity. Normally, if I talk about government contract, because I've done an audit where a government contract was offered, so it was offered only one condition, that first of all, show us your assets. So the director of the company created huge level of inventory to show the capacity of the unit, that they are able to produce so many units that government can ask for, and that basically got the contract only because of the inventory level. TCWG, right, I'm not explaining. TCWG is toast charge with governance, also known as director. Right now, I'm not explaining. This I will explain in detail in the chapter number 3. Okay, Tam. Yeah, in India, you can say Indigo. You can also take an example of both, but right now I'm not going to take an example. I remember the company name. I just forgot it. Basically, this is one of the most cheapest and basically world largest airline. Okay, what are the concern of supplier, banker, lenders, basically creditors? They have provided you goods. They are expecting the payment. Bank have given you loan. They are expecting a repayment of loan with the interest, and basically similarly for lender. So they are definitely interested in your financial stability. Governments is interested in whether you are reporting correct profit so they can get the tax. At the same time, whether you are following the laws and regulation. Following laws and regulation is the first priority of the government, that you actually follow the laws and regulation. You take care of the employee. You don't do any mismanagement practices, basically mistreating your employees, and bribing any official, any basically violation of any law. That is the first priority of the government. Second priority, that you report correct profit so that government can also collect tax, right? So every stakeholder has a different stake. Every stakeholder has a different stake. Many, let's say, any if I talk about any public will also be a stakeholder, because they are concerned what you are doing for the locality, what you are doing for the environment, what you are doing for the society. So if I tell you Starbucks is a coffee selling company. What it is doing, it is reporting in its financial statement, in its basically annual report, not the financial statement, but it is reporting that how it is reducing carbon. The cup that it's sell na, it is showing that how many they have stopped giving the napkins to the customer, they have saving the wastage, and they are reporting that how much carbon emissions they have saved. This is actually their report. Just see, this is a coffee selling company and they are claiming themselves to be carbon emitter free. So they are also trying to provide information to public or the local government or the locality that yes, we are also taking care of you as well. Okay. Stakeholder clear, everybody? Though I hope you know this already because you are at skill level, but this is just a refresher. So that once we jump into the questions, you don't basically become numb, or you don't feel like, okay, what is this concept? So far, this was just a concept building. Now come to the external audit. Any questions so far, anybody, about the accountability, agency, stewardship? What is the stakeholder? So far clear? Now we will come to the external audit. What is audit? What is the objective of audit? What is the objective of auditor? What is independent report? Now audit starting. So far we were just covering the concepts. Now let's start the audit. Any question, anybody? Yeah, please go ahead, Ekta. Yeah, sure. Sorry, but Yes, Ekta, go ahead.
सर मेरे को बस ये स्टीवर्डशिप और ये जो अपना एजेंसी वाला है, सो इसमें मेरे को ये पूछना था कि मतलब हम कैसे फिर डिसाइड करते हैं, बिकॉज फॉर द पॉइंट ऑफ व्यू आई एम जस्ट टेकिंग लाइक एग्जांपल, फॉर अ पॉइंट ऑफ व्यू ऑफ कंपनी, तो उनके हिसाब से तो फिर स्टीवर्डशिप ज्यादा बेटर होगा ना, बिकॉज दे विल गिव द बेटर परफॉर्मेंस, और बिकॉज उनको अपना रेटिंग स्केल से कोई फर्क नहीं पड़ता, बस दे हैव टू उनका कंपनी का परफॉर्मेंस एक हाई लेवल पे रहे, जो भी मैनेजमेंट, जो भी डायरेक्टर्स हैं, दे वांट की 22 करोड़ का प्रॉफिट हो, तो वो उस पे ज्यादा फोकस करते हैं। एजेंसी इट्स लाइक द मैनेजमेंट, दे वर जस्ट फोकस ऑन देयर वर्क कि हाँ भाई हमें इतना काम करना है और इतने तक का हमें टारगेट मीट करना है, जो भी उनका रिस्पॉन्सिबिलिटी है। तो हाउ द कंपनी इज डिसाइडेड कि उनको कैसे मतलब स्टीवर्डशिप से काम कराना है या एजेंसी से कराना है, मतलब ये जो कॉन्फ्लिक्ट्स रहते हैं इसको कैसे रिजॉल्व करती है कंपनी, लाइक?
It's a good question. Basically, agent conflict agency issue or conflict of interest is a problem. That because directors are concerned with their interest, shareholder want maximization of wealth. Then how do we align that? One way is try to create an incentive for director. Let's say if let me give an example. Let's say if I say director that if you achieve profitability, in this case of in this case of the airline I'm talking about, they give an incentive that if you double the price we will give you $100 million, right? So in this case now director is very much interested, because if the price of the company increases, so they will receive the handsome bonus. At the same time the company is also benefiting because their share price is also increasing. This is
Right, right.
of the interest of the director in the company. Now, one view you have to basically make sure that the incentive is a good incentive. It is not a bad incentive. Another example, let's say I will give a profitability based target that if you achieve this much profitability, then I will basically give you a bonus. Now, what can happen now in this case? If director is not able to achieve the profitability, but because that bonus is dependent on that, in that case, director might manipulate the profitability. What if next year sale they've recorded in the current year? What if they try to understate the expenses? There is a risk. So that is why I try to create an incentive that is long term for the benefit of company as well as for the director. If you miss incentivize the director, in that case it can be problematic. It can create further problems. Okay, Ekta? Clear? Okay, yeah. No, nothing. We were just discussing the agency issue. Okay. Now coming back, we are starting this external audit, and let's discuss that. Let's read this definition. What is an objective of external audit? Audit or external audit, they are same thing. Objective of audit is financial statement. Objective of audit is to enable the auditor to express an opinion. Enable the auditor express opinion whether financial statements are prepared. Financial statements are prepared in materially in accordance with applicable FRF. Now, I have to break this definition down for you, that what is FRF, what is materiality, what is financial statement, what is auditor expressing opinion. Okay. Auditor opinion is to obtain reasonable assurance. I hope we know what is reasonable assurance, that auditor is checking in detail, but it is not a guarantee. Whether financial statements, okay, are free from material misstatement, okay, whether due to fraud or error, okay, in order to enable to express an opinion, okay, whether financial statement are prepared in accordance with the applicable FR. Again, the same line as above. Let's try to break this down. What do we mean by applicable FRF? What is this definition? Okay. Yeah, here. External audit. We now know that company will be managed by the director, shareholder will be the owner, director will be the agent. So shareholder appoint the basically auditors to check the work done by the director in the financial statement. Okay, this is related to financial statement, not the operations of the company. Please mind you, audit is about financial statement, not the operations of the company. If it is operation of the company, then it will be an assurance of the operations, not the audit. Audit is about financial statement. Please concern yourself with the financial statement. First of all, those who don't know financial statement, or those who are shy to ask, or those who forgot what are financial statement, let me give you a quick refresher. We talk about balance sheet, or this is also known as, because we are learning UK, basically audit, so we have to remember the word of UK, statement of financial position. Okay, position. SFOP, statement of financial position. Balance sheet, I hope you know as on a date. That what is your assets today? What is your assets on December 31st? Assets, liability, as on a date, not for a period. Please, I hope you know the difference between period and an as on a date. Profit and loss, or also known as statement of profit and loss and other comprehensive income. Anybody who can tell me what is OCI? SPL OCI. Okay, SPL OCI. It can be together, it can be separately. Anybody who wants to tell me any example of OCI? Class is very silent. This is not, done. Okay. Okay, very good, Shubham. Very good, Preeti. Very good, Ekta. Very good. So you all have a common example. Yes, Alok, please tell me. You want to say something?
सर बेसिकली नॉन कैश इनकम ना,
Non-cash? No, not non-cash.
जो मतलब जो हमें कैश में नहीं हुई, जिसका हमें
Please go on.
जिसका हमें मतलब इनकम नहीं हुई, मतलब हमारे पास आया नहीं उसका कुछ.
No. Basically, what you're saying is implying by the accrued but not earned. No, so this is what you are trying to say. But I think what you mean is revaluation gain, let's say any fluctuation, something like that, if you remember.
Yes, sir.
Revaluation, let's say we do a building property, we have a property and we revaluate it from 10 crore to 100 crore. This 90 lakh is something that is out of thin air. So this is
शेयर प्रीमियम.
share premium. Share premium, no, not share premium. So I will recommend to see the list what comes in the OCI. If not, don't worry, you will cover it in your financial reporting. Okay, Alok?
Okay, sir.
Okay. Now, so those who are saying revaluation, you are correct. Revaluation gain or loss, basically revaluation gain majorly. Just a second, huh? Give me a second. So what we were discussing financial statement. Balance sheet, P&L, we are through. This is for the period. Please remember, this is for the period. For the period. Let's say January to December, April to March. Okay. Let's say September, October to September, any period. So normally, internationally, this period is followed. In India, April to March period is followed. Okay, the plan is that just to give you another information not relevant for you, India is trying to shift from April to March, from March period to Jan to December period. The challenge in India is that in October to December, the maximum holidays are there. And there is a over dependency of European country and US country over India in the month of December. So if India has a similar calendar, it will be difficult. But if India get a calendar of January to December, it will be easier for foreign investors. Okay, just for your reference, nothing relevant. Okay. Second, cash flow statement. statement of changes in equity, or notes to account. Please remember notes to account, or also known as disclosure policies. It is very important that when we talk about financial statement, you don't exclude notes to account. You don't forget notes to account. Notes to account is as important as basically balance sheet and P&L. Okay, these are integral part of financial statements. So cash flow statement, basically cash flow, or basically I call it bank account, bank and cash account. If you know now, you know basic accounting, you know cash flow is nothing but a classification of cash account or bank account. That where your cash went, where your cash gone. Cash flow between operating, investing, and financing activity. Statement of changes in equity, SOKI. This is for equity account breakup. Equity account breakup. What is your equity capital? What is your share cap? Basically preference share capital. Let's say what is your reserves? Basically capital reserve, revaluation reserve. Revaluation reserve going in OCI also come in SOKI. Okay. What is your, let's say, capital reserves? What is your statutory reserve? Let's say security premium. All this comes under the SOKI. Okay, I hope you know. So auditor is going to evaluate financial statement prepared by the management. Remember, financial statement is prepared by the management. It is their responsibility. It is prepared by the management, evaluated or basically tested by auditor for the shareholders. Clear? Shareholder or stakeholders. So, reasonable assurance about financial statement part is clear. They are free from material statement. Let's see what is material statement, or in all material spec according with the applicable FR. Let's understand these two components. Now, let's say I'm an auditor and I'm going to audit this company, let's say ABC Limited. Okay, this is 31st December 2024. We are about to hit 31st December 2024. So what will happen? Let's say the assets of the company, let's say property, plant, equipment, inventory, cash, let's say trade receivable. This is 8 crore. This is 1 crore. This is, let's say, 50 lakh. This is, let's say, 50 lakh. So total assets are 10 crore. Okay. Let's say equity, it has 5 crore equity capital, and then loan or borrowing, let's say non-current liability, let's say it has 2 crore as loan, or 3 crore as loan, and then current liability, it has, let's say, creditor payable as 2 crore. So again, balance sheet is 10 crore. Now, as you know, so far that audit is reasonable assurance. In reasonable assurance, we try to check detail. But as you know, reasonable assurance is not a guarantee. So you know what? Auditor basically cannot do 100% audit. Why? Well, there is a problem. There is a technical problem. First of all, auditor tries to obtain a reasonable value, that whether these values are reasonably okay or not. Auditor doesn't take the guarantee of this value. There is a reason for that. One is basically auditor doesn't check things 100%. Second is the judgment or estimate involved. Let me explain this. Basically, let's try to do the audit of Airtel, any telecommunication company, let's say Airtel, or let's say Reliance, or let's say AT&T. If you are not aware about these Indian companies, AT&T, an international telecommunication service provider, right? So what will happen here? Let's say in a single day, Airtel, basically, let's say it has a 15 crore user or 20 crore user. I don't know how much. You can check yourself. Let's say it has this many users in India. In single day, these users call and basically receive calls, call their, user, another user, and receive calls. They text message, they, use internet. So for single day, just think about the billing or the invoices generated by Airtel, Reliance or AT&T. How many billing will be there? Let's say it will be in crores. Now a revenue line is coming. If I talk about P&L, a revenue line is coming, sales. Let's say this is let's say 1,50,000 crore. As an auditor, I need to check whether this 1,50,000 crore is correct or not. So what I will do, I'll try to basically check some of the invoices. But what if, let's say, how many invoices I can check? There are, let's say, billion invoices. Why billion invoices? Because in one single day, there are crores of invoices because of calling, text messaging, internet, everything, having a different rate. And then multiply this by 365 days. Just see how many work I have to do. You know what? Even if I combine all Delhi firms, and try to do the audit of this one single day, it will not be done within 30 days. It will not even be done within 30 days. Just forget about 365 days. How many firms, how many resources are required to just check this? Is this possible? Is this humanly possible? Are you seeing the challenge here? Let's say take another example if you're not able to get it. Walmart. Walmart has $1 billion revenue because Walmart has so many sales. And if I want to verify the sale of the Walmart, let's say if I go and check the invoices, how many invoices I have to check? This is again in crores. How will you get the resources to check these invoices? Are you finding the challenge? Yes or no? Guys, yes or no? Please, why chat is so silent? Right? Do you get the problem? That if I talk about any basically major company, doing 100% checking is not humanly possible. Maybe a small firm, let's say invoices are 3,000 or let's say 10,000 or maybe even 50,000. Maybe we can do that. Maybe we can hire more people and basically do that. I have myself invoice basically check, let's say 4 to 5,000 invoices in a single day. It was a very, very bad day, trust me. And half of the time I was not checking. I was just ticking. Yeah, this is matching with this. This is matching with this. I was not checking. Just think about how will you do crores of transactions. So that is why we have a solution that why not is, let's say there are 100% population. There is a 100% population of invoices. Why not do some sample testing, sample checking? What is sample checking? That let's say there are 50,000 invoices. Why to check 50,000? Let's check 2,000 to 3,000 invoices. Okay. Let's see the result on that and try to project that result on 50,000. This is how, even surveys are done. It's not like when you are doing a survey, you are going each and every person home and asking their opinion. No. What do? You basically check, let's say 10,000, 50,000, 30,000 people and try to project how basically this will be applying for the rest of the population. This is called sampling technique. First of all, clear this is how we do the sampling. We take a couple of samples out of the entire population. We try to see how they are behaving, what is their opinion, what they are, resulting in. And based on that, we try to judge the rest of the population. This is called sampling technique. Clear, everyone? Clear? So, as an auditor, what would be my responsibility? Let's say, where should my focus be? Now I have to do sampling technique. Now, where should be my focus? Should I be focusing on this 8 crore or should I be focusing on basically on this 50 lakh? Which do you think is more relevant here? Out of this 10 crore, which do you think is more relevant? This 8 crore or this 50 lakh? Which do you think is more relevant here? Shubham saying 8 crore, Alok saying 50 lakh, Ekta saying 50 lakh. 50? No, this is 50 lakh, not 50 crore. Okay, Shubham, Ekta, basically Ekta and Alok, why you are saying 50 lakh? Yeah. Basically, my point is, if you have a total asset of 10 crore and you cannot check everything. So what you are going to most basically check? The most relevant or most material item? Most relevant or most material item? Right? Let's say, if as an auditor, I assure shareholder, I check the major asset. It was 8 crore and it was basically, accurate. So that means majority of the balance sheet is checked. Majority of the balance sheet is checked, yes or no? Or materially the balance sheet is checked, right? Right? So as an auditor, what I am trying to focus here, because I cannot do 100% sampling, 100% testing, I am trying to use a sampling technique. Whatever is material, I am trying to go after it. Let's say 8 crore is material, 1 crore is material, I will go after it. How do you define materiality? That is a different thing. Because maybe, let's say, a company, let's say that had $1 billion sale, maybe lakhs or crores will not be material for this company, but million will be material, yes or no? Let's say, let me give you another example. SBI in India, SBI Bank, it is a bank and it has 14,000 branches in India. 14,000 branches. Do you think auditor is going each and every branch? Do you think that is possible? Right? So what is happening? Wherever is the most valued branches, SBI is, let's say, what I remember, SBI has, let's say, is 5 lakh crore or basically something like that business. Maybe you can check online what is the value of SBI. So whatever is the most valuable branches, SBI basically auditor will try to go visit there and basically try to test those branches. And based on that, whenever auditor has covered the major, let's say it is 2 lakh crore, auditor will try to basically cover 1.5 lakh crore or let's say 1.8 lakh crore. So that majority of the value is covered. Then we can give an assurance, yes, if this is okay, then rest of them would be okay also. Right? Right? So when we are saying auditor try to obtain reasonable assurance, does not provide guarantee, okay, about whether financial statement are free from material misstatement. What is material misstatement? That first of all, material that is relevant, okay, that majorly covers, right? Now misstatement can be fraud or can be error. Let's say if company has reported 8 million, it could be because let's say there was a 1 million figure which was in error. It was not supposed to be booked. Let's say we have received the advance from the customer and we booked it as a revenue. It was by mistake. It was an accounting error. So I'm not going to say no, this is not an error. Definitely it should be 7 million and 1 million should be advance received. Okay, 7 million will be my revenue, 1 million would be my liability because this is advance received. What if this was done intentionally? Then it is a fraud. Famous example, Enron. Famous example, Satyam in India, where board of director reported fake revenues where there was no revenue. This is a fraud. So a misstatement, which is material. We are trying, as an auditor, we are trying to see whether financial statement has any misstatement, which is material. Please understand. We are not saying that there will not be any misstatement. Yes, there will be misstatement in the financial statement, but they might be very small, very, not material enough to pay your attention. If let's say if I talk about SBI Bank, I find a fraud of let's say 50,000 rupees. So should I start, advertising it in the public that this company has a 50,000 fraud? What are you talking about? This company is 2 lakh crore, guys. What are you talking about? So this 50,000 is not relevant. But the moment there is a 1,000 crore fraud, there is a 500 crore fraud, definitely it becomes relevant. Yes or no? Yes or no? So we as an auditor acknowledge that financial statement may be misstated, but it is not materially misstated that need the user's attention. Every now and then, the company is so large, definitely small misstatements are allowed. Let's say it's a small company. Let's say the capital of the company is 10 crore or let's say 10 lakh. So in this case, if there's a 1,000 mistake, 1,000 rupees mistake, should I report this? I don't think so. Yes or no? So materiality according to the company size, according to the company nature. Whatever is material, we will try to report it if it is due to fraud or error. What we are saying that auditor try to obtain reasonable assurance that financial statement, balance sheet, P&L, cash flow statement, all this are not materially misstated, whether due to fraud or error. How we will do that? By obtaining evidences, by checking accounts, by looking at the balances, by looking at, let's say we have a bank balance in the ledger of the company, we will see the bank statement balance in the bank. Basically, what is the bank statement saying the balance? What is the ledger? So they are matching. Yeah, everything seems okay because I have a evidence of bank statement. Right? You may tell me that, let's say you have bought a phone. Okay, you may tell me you have bought a phone. So how can I verify that? That the money that I have given you, so that you have bought a phone. I will see the phone directly, or let's say I will see the invoice of the phone. This way I can assure, yes, you actually use the money. Right? So auditor will obtain evidences so that they can create an opinion that yes, the financial statement are not misstated. Yes, the financial statement are misstated. Whether misstated or not, that is the opinion I will create. As a practitioner, I will try to express an opinion in a report to the user. User is the shareholder or the stakeholder. Clear, everyone? I hope you are getting the clarity because this definition is technical, but you get the clarity about it. Whether financial statements are prepared in all material respect. All material respect. What is material? That basically there may be misstatement, but majorly it is prepared in accordance with the applicable FRF. Now, last question. What is FRF? Anybody who wants to tell me what is FRF? I'll explain, don't worry. But let's trust your knowledge. What is FRF? FRF. And please don't give me the full definition. Financial reporting framework. Alok, in a way, you are right. Accounting standard. Reporting framework. Okay, financial reporting framework in case anybody was wondering. Yes, shareholder are part of stakeholder. What is stakeholder, Ekta? Person who has an interest. Shareholder have a direct interest. So they are the primary stakeholders. Okay, Ekta? Shareholder, creditor, lender, and let's say potential investors. They are primary stakeholders. Okay, you can see this given in your book. Okay. Anybody who has given the money is the primary stakeholder. Ideally, it should be employee as well. Employee and director should be part of it. But they say no, they are internal stakeholders. They are not primary stakeholders. Because they are earning money from the company, they are not providing money for the company. But again, I don't agree with this because employees are dependent, their livelihood on the company. So I don't agree with this, but again, okay, fine. Basically, account to IS financial statement should be prepared. Yeah, you are correct. You are correct. You have an understanding of financial reporting framework. Okay, let me break it down to you why this is called financial reporting framework. Okay, please see that if I am reporting trade receivable, let's say there is a trade receivable. Trade receivable, if you don't know, is the debtor. Okay, normally you would see this trade receivable, trade payable. You will not see data or creditor in the UK books. Okay, this is the term they use: trade receivable, trade payable. So let's say I have 100 crore trade receivable. At the same time, I have a trade payable. Okay, let's say creditor 50 crore. These numbers are accurate. Okay, you can see, you can basically don't need to worry. These numbers are accurate. Now, when it comes to reporting, people have different way of reporting. One says, let's report it in asset, let's report it in liability. Another person can say, one school of thought is report it's basically separately in asset and liability respectively. Another school of thought is says, no, let's try to offset them. That trade receivable minus trade payable net is trade receivable because trade receivable balance is higher, so it should be reported. If trade payable balance was higher, then it would be trade payable. So accordingly, show the net, let's say 50 crore, because it is basically the net amount that is pending. It is another way of reporting. Now, if you think about it, people will start developing their own way of reporting because amount is accurate. How do I report it is basically will be depending on the person. See, account will never change. This is something I can write on paper. Account will never change. What is debit will always be debit. What is credit will always be credit. It is a 500-year rule. It hasn't changed since then. But what has changed is the way you report things. Earlier, you know, there used to be a balance sheet on T shape where assets on the right side and liability on the left side. You would report equity share capital, preference share capital, liabilities, and here you will report assets basically into non-current and current assets. Non-current asset more than 1 year and current asset in less than 1 year. You used to have a P&L account. P&L account where purchases, sales were reported like this in a T account. Now how they are reported? Now they are reported basically this way. They are reported, let's say, in a vertical format. That first of all, we report assets here, we report equity here, equity share capital, and then we report liability here. Okay, in India we used to prepare balance sheet and basically P&L in the vertical format. Not in the T account. But this was a problem. Let's say I'm a person sitting in UK, US. I want to basically invest in India. I want to invest in India. What would be the challenge? I'm habitual of seeing balance sheet and P&L in this format. Sales, cost of sale, gross profit, expenses, and profitability. I'm used to seeing this. And then there is an OCI. The moment I see this, it will be very uncomfortable for me as an investor to read it. You might say, okay, why not investor is educating themselves? This is another thing, but please understand, this is a person we are talking about has $100 billion, and they want to invest in the country. And any country want to bring as much foreign capital as they can, because foreign capital is the thing that make country boost. Even USA is interested in foreign capital, even after being the most wealthiest democracy in the world, right? So every country is interested. So that is why India adopted basically India converged its accounting standard to Ind AS. What is Ind AS? Just to let you know, accounting standard are the reporting practices adopted by the country locally. So India had its own accounting standard. US has its own accounting standard. Bermuda has its own accounting standard. Ireland has its own accounting standard. This is the way the country companies report their financial statement. Okay, like T account or vertical account, whatever they want. Okay, country have their own independence. They can report their financial statement according to the requirement. This much clear, everyone? Okay, this much clear that a country can report their financial statement according to the accounting standard of the country, according to the general accounting accepted principles. This is known as GAAP. General accounting accepted principle, GAAP of the country. So you can report it according to your requirement. That is basically allowed. But think about the person who's going to invest in multiple countries. It is going to be very difficult for the person. If let's say I'm in Ireland, I want to invest in UK, I want to invest in Australia. Every time I go there, I have to read each country's financial statement. There are more than 200 countries. How many financial statement I'm going to read? How many accounting standard I'm going to learn? That is why a solution was formed. Why not make an international accounting standard or international financial reporting standard? IFRS. And if you learn IFRS, if you complete your financial reporting or SBI subject, you will be in high demand in the market, because IFRS is a requirement that is still today is required by multi company. More than 160 countries had adopted IFRS. Though US don't follow IFRS, US follow its own standard. US always try to push their own standards. But more than 160 countries have IFRS. And you know why ACCA is called Global Recognition Certificate? Because you learn IFRS. These IFRS are basically used in all European countries. So if you are a basically company registered in European country, definitely you are supposed to prepare your financial statement as per IFRS. Why? Because these countries want other companies to invest in their company. So they make their company to report based on IFRS, not on accounting standard of that country, but on the IFRS. Okay. This was so important that at that time, the Prime Minister of India, Mr. Manmohan Singh, in 2005 committed that India by 2009 adopt the Ind AS. But later on, things didn't work well. The basically adoption was done in 2013 or 2015. Okay, you can check the date. Maybe 2015 if I remember correctly. So it was deferred for 6 years, but India promised in the global summit that India will be adopting IND-AS, basically IFRS. Okay. Now, one thing to notice. Let me just check whether you have any questions so far. Okay, Alok, I'm just unmuting you so we can have a conversation. Alok, are you here?
सर गैप का मीनिंग क्या था?
General accepted accounting principle. What is GAAP? General accepted accounting principle means that if I'm in India, I can decide my own accounting requirement, my own reporting requirement. Like I said, accounting will not be different. Debit, credit will never change. The golden accounting rule, debit what comes in, credit what goes out will never change. It's the reporting format. If I want to report my balance sheet in a T format, I will basically ask this in my accounting standard as per my general accounting accepted principle. This is GAAP. US has their own GAAP, US GAAP, Indian GAAP, Bermuda GAAP, Australian GAAP. Every country has their own GAAP.
मतलब सर
Okay.
गैप जो है वो इंटरनेशनल अकाउंटिंग स्टैंडर्ड ही होगा एक तरीके से,
No, no,
जिसके
no,
थ्रू
no. You're confusing. Understand. GAAP is the accounting principles followed. Generally means normally accounting principle followed. So every country create their own GAAP. First of all, and tell me this is clear. Every country creating their own GAAP.
यस सर यस.
US GAAP, Indian GAAP, Bermuda GAAP, they are own each GAAP. Now this creates a challenge, Alok, that if every country start creating their own GAAP, and they already have their own GAAP. So it will be difficult for an investor like you and me who want to basically invest in multiple countries. Japanese investor, when they understood that their market is saturated, there will be no more demand. So they went basically outside. They went USA, they went basically UK. They wanted basically invest money because they saw that their company is not basically growing anymore. Like India is growing right now, I hope. Right? India growth is basically one of the fastest growing economy. So people are interested in basically investing here. But the challenge would be that they can't read the financial statement of the India because they are prepared based on the Indian GAAP. So what is the solution? Creating a international accounting standard that everybody follows, that an international investor can easily read, that is familiar with. So international investors are familiar with the vertical shape, statement of financial position and statement of profit and loss. Okay.
Yes sir.
So these international accounting standard known as IFRS. Okay.
Yes sir.
Okay. Just answer me, because we also have to understand the Indian situation. So what happens in India? India had their accounting standard. They basically, foreign investors were not able to understand the balance sheet or basically the P&L prepared by the Indian companies. So what they did, Mr. Prime Minister, Mr. Manmohan Singh, that time Prime Minister 2005, he promised that India will be accepting IFRS. India will be accepting the international practices, what we basically, when we prepare the financial statement. Okay. Now what happened? This was done in 2015, if I remember correctly. But India did not follow IFRS. Pakistan have IFRS. Oh, do you know? Pakistan has basically taken the IFRS, but India followed IND-AS. What is IND-AS? IND-AS is that, okay, we will prepare our balance sheet just like you prepare. SOFP. We will also call it SOFP. We will also report assets here, liability, equity share capital here, and liabilities here. Okay. This is how we will do. It's just that when it comes to accounting, let's say for PPE, if you ask us to prepare, let's say, fair value or cost, we will only allow cost model. Okay, why? Because this is as per our country requirement. Okay, look. So what is happening? India has converged IFRS. India has not adopted. What is adoption? Copy paste. Pakistan have IFRS with their country. Why? Because they copy pasted the IFRS. But Indian people, basically the Indian regulators saw, no, we cannot copy paste the IFRS. We have our own local requirement. 90% or 95% we can basically adopt, but 5% we cannot adopt. Let's say if I talk about land. Land is something in India you cannot have a fair value. It is very difficult. Why? Because in India, there are very, very few actuaries. Like, do you know actual number of actuaries who basically appraise the land? They are 300 to 400. Overall India. In overall India, there are 300 to 400 actuaries. In my company, there was one. So what I'm trying to say here is that India's is the local financial reporting framework for India. Financial reporting framework for India. It is not IFRS, it is India's. If I talk about UK, UK is the originator of IFRS. So definitely they have adopted IFRS. But for meeting their local requirement, they also have UK GAAP. So here FRF, Financial Reporting Framework, is the UK GAAP for UK reporting. Clear? Majority of the countries follow IFRS, but because meeting the legal, basically their local requirement, companies basically change IFRS or tweak them. Basically, they converge the IFRS according to their requirement. Currently, India has Ind AS. Okay, Ind AS is what? Ind AS is adoption of IFRS, but 5% they have changed. That's why it's called converge, not an adoption. Okay, now whenever it is come about the Indian companies, they will prepare the financial statement similarly like international accounting standard, but there will be some small tweaks. Now as an investor, I can understand this financial statement, so for me as an investor, the problem is solved. And also India can meet their own requirement. Clear with the what is financial reporting framework? Financial reporting framework would be the local accounting standard reporting method. Okay, it can be international accounting standard, it can be local accounting standard, depending upon the applicability of the company. If you know TCS company, TCS has 3 accounting standard. One is for USA, one is for Europe, and one is for India. So it prepares basically financial reporting framework is basically FRF, FRS I think. I don't remember the accounting standard for US. They also report for IFRS based financial statement, and they also report India's accounting standard. Now, because India's are 90 or 95% same to IFRS, now TCS don't have to put effort here. TCS only have to put effort here. Clear? In this case, there are 3 applicable FRF. So if you are going as an auditor of TCS, you have to see which is the applicable FRF you are auditing. If you are auditing US based audit financial statement, you will follow the FRF of US. If you are auditing the European based financial statement, you will follow the IFRS. If you are following basically Indian based financial statement, then you will follow India's, depending on the applicable FRF. Is it crystally clear to everyone? Yeah, sure, Ekta. The effort, it goes to explain these concepts. Yes, Ekta,
Yeah.
please.
Yeah, hi sir. So my question is कि जैसे आपने बताया कि इंडेस एएस हमारा मतलब रेगुलेटरी है कि हमें इंडेस एएस में ही फाइनेंशियल रिपोर्टिंग करना है.
For
But
Indian.
yeah, for the Indian. But for example, if there is some entity who wants कि हमारे इसमें कंपनी में foreign investment भी आए just for a growth or just for something. So उसमें हम जो शेयर होल्डर्स होंगे, फॉरेन इन्वेस्टर होंगे, तो उसके लिए हमें अपने इंडेस एएस को कन्वर्ट करना पड़ेगा आईएफआरएस में.
Let me tell you. This is a good question, and it will basically help you cover a general purpose financial statement and a specific purpose financial statement. Let me explain.
Okay.
Okay, please be with me.
Yeah.
So what happens? See, what is GAAP? GAAP is basically the general accounting practically of the country. So right now, if these people, let's say the company that is in India and inviting the foreign investor, they will prepare their Ind AS because India's financial statement. Okay. If foreign investor like it, they are able to understand, yeah, we know this because this is a similar format, 90-95% things are matching. So yes, we will accept it. Or maybe foreign investors say, no, we don't understand this. Please prepare a specific financial statement. This is the general purpose financial statement. General purpose financial statement. This was for everybody. This was for foreign investor, Indian investor, banking, employee, everybody, every stakeholder. But if the the foreign investors say, no, we can't understand this, please prepare a separate financial statement for us based on IFRS or based on US GAAP. So in this case, this will be a specific financial statement. Okay, now again here the gap will be IFRS or US gap, whatever is basically the requirement is. But this is for specific purpose. This will not be available publicly. This will be for the users that you have prepared for. Let's say sometimes bank asks, or sometimes the let's say the user, let's say the foreign investor in this case. So normally I basically, because it is India's and it is based on IFRS, it should not be a problem for a foreign investor. But if they ask, you can prepare a specific purpose financial statement. But it would cost the company. It would cost the company. It is not good for the economy because your company is putting two efforts to go basically separately. This was a major problem for TCS, or let's say, any company which was listed in the New York Stock Exchange. What they used to do, they used to prepare their financial statement based on Indian requirement, and also they used to prepare the financial statement based on the requirement of US GAAP, or let's say the European country. This was a costly thing for TCS. TCS were tired. This is not a good business practice. This is not ease of doing business. You are complicating things. So as a local regulator, as an Indian government, what you are trying to do is reduce their effort. Now you try to do India's. Here the effort for TCS will be significantly reduced. They just have to tweak two to two things. Now the European financial statement and Indian financial statement will be very much similar. Okay, clear, Ekta, that how the general purpose financial statement is different from the specific purpose, and what is the applicable FRF here? Applicable FRF. Applicable FRF can be anything. Indian requirement, Indian gap. It can be international gap as required by law. And you know what? If you are a listed company, in this case, your FRF also include not only this accounting standard, or let's say IFRS, but it also includes the law requirement. Okay, it also includes the law requirement. What if there is an additional requirement? If listed companies are required to treat security premium reserve in a particular manner. They are supposed to create redemption reserves if they have get the debentures or anything like that. There is a specific accounting mentioned in the law. Now you will also additionally follow law. Clear? So FRF is not only accounting standard, it can be any applicable reporting requirement for the company. It can be general purpose, it can be specific purpose. I hope this is crystally clear to you. Though this was an audit subject, we are right now learning the accounting. Alok, this is for larger company. Any company that has a value of more than 500 crore, they are supposed to follow the Ind AS. Ind AS is not an easy thing. Basically, IFRS is not an easy thing. It is a very, very expensive thing. You need to have, let's say, 50 to 100 crore budget for that. It is that expensive. So any company that has a budget of, let's say, any company that has a value of 500 crore, you are supposed to follow Ind AS or let's say IFRS. If you are a small company, you are starting, so that's why you are given exemption for IFRS. You can normally follow your local gap, and local gap has so many exemptions. Okay. Okay, look. So IFRS is normally followed by listed company or large companies. Smaller companies, they follow the normal accounting standard. They don't go into complexity, which you will learn in your financial reporting. Okay. Now coming back, I hope now this definition is crystal clear. Objective of audit of financial statement is to enable the auditor express an opinion on whether financial statement are prepared in all material respect in accordance with applicable FRF. Yeah, opinion part is pending. But applicable FRF, financial statement, material respect, all this is clear. Objective of an auditor is to express reasonable assurance about whether financial statement as a whole are free from material misstatement due to fraud or error. In order to express them, opinion part is pending that financial statement, all financial statement are prepared in all material respect as per applicable FRF. Okay. Let's take a break. I know you need a break. Let's take a break. I forgot to take a break. You could have told me. And let's discuss what is true and fair, what is opinion. So opinion part is pending and true and fair part is pending. And then this chapter is done. Just single lines is making us, taking so many concepts. Yes, Alok. Sorry. Yeah, Alok.
सर जो कंपनी जो स्टैंडर्ड फॉलो कर रही होगी वो सबके लिए जनरल पर्पस फाइनेंशियल स्टेटमेंट्स हो जाएगा.
Basically, general purpose financial statement will be required by law. If it is Ind AS, if let's say law says that the larger company have to follow Ind AS, in that case, this will be general purpose financial statement for larger company. For smaller company, if it is a company, because Companies Act requires the financial statement preparation for the management to show stewardshipness. In that case, the accounting standard for the India will be the general purpose for the Indian company. Let's say if I'm a firm, I'm not a registered company. In that case, normal accounting practices will be the general purpose accounting practices. I don't need to follow accounting standard. I will do normal accounting and
सर
that will
बट
be practices.
सर बट अगर एक कंपनी है जो एएस फॉलो कर रही है और उसके अंदर फॉरेन कंपनी को इन्वेस्ट करना है, तो उसको अपनी एएस को आईएएस में कन्वर्ट करना पड़ेगा, मतलब इंडिया
No,
में कन्वर्ट करना पड़ेगा?
listen. General purpose financial statement are prepared on GAAP. Okay. But if you have to, if let's say foreign company demands, only then you will prepare. Now, why you are necessarily preparing? Then
ओके,
you prepare a specific purpose.
स्पेसिफिक.
It's
ओके
not
सर.
like anytime a foreign company prepare, basically invest in you, then you have to prepare a separate financial statement. No, if they demand, then you prepare it. Okay.
ओके सर.
This
ओके
is
सर.
for specific purpose.
ओके सर.
Shubham, clear with this conversation? Shubham, clear? The conversation I had with Alok about general and specific purpose? Yes, Ekta.
सर तो एज पर इंडिया, तो इंडिया के बेसिस पे हमारा जो फाइनेंशियल रिपोर्टिंग फ्रेमवर्क रहेगा दैट इज आर इंडेस एएस, अनटिल एंड अनलेस जब तक क्लाइंट, अनटिल एंड अनलेस हमारा जो इंटेंडेड यूजर्स है वो अगर दे वर सेटिस्फाइड विद आवर फाइनेंशियल रिपोर्टिंग फ्रेमवर्क, इज इट ओके। अदरवाइज इफ दे नीड कि नहीं हमें स्पेसिफिक मतलब हमें आईएफआरएस में चाहिए, तो हम सिर्फ उतनी रिक्वायरमेंट्स को ही स्पेसिफिक जर्नल में चेंज करके देंगे स्पेसिफिक रिक्वायरमेंट्स।
Basically, specific purpose is for specific purpose. General purpose is for everybody, right?
ओके, ओके सर, थैंक यू।
So let's take a 10 minutes break, guys, and then we'll be covering true, fair, and present fairly. This is the last concept and the demand and the opinion part also. I will try to cover the opinion part today itself and the true, fair, and present, so that opinion part is covered in the chapter number 20. Yes, Preeti.
सर एक्चुअली वो अगर एमएनसी कंपनी इंडिया में लोकेटेड है तो सर वो कौन सा अकाउंटिंग स्टैंडर्ड फॉलो करेगी?
Yes, yeah, a very good question, Preeti. What will happen if MNC company is registered in India? Then Indian laws are applicable to the foreign company, right? That is registered in India. So that is why it has to follow the requirement of the basically company law. So if the company law requires foreign company to prepare India's financial statement, then that will be basically required. They will be preparing that financial statement. Okay, Preeti? This happens if let's say a company comes in India and they register themselves. In that case, they will be preparing as per the local requirement. A good country that is promoting business, they will try to basically make sure that the local requirement are not stringent and the local requirement are similar that the foreign company has. That is a good country. It can be a bad country which requires no, you will prepare only our accounting standard. We don't care what you do outside, but doesn't change the fact. Whatever is the general accounting principle, you will follow that only. You just have to see which are applicable to the company, okay, as per the law requirement. That is why applicable FRF word is used. It is not used financial reporting standard. It is not used IFRS. It has used whatever is applicable to you, whatever law requires you to follow. Correct, everyone? Okay. So let's take a break finally. Let's take a 10 minutes break and then we'll be back. Let me know in case of any question. I'm here. Others, we are on a break. Doesn't matter, Ekta, as long as they basically ask the company to prepare those financial statements, only then they will prepare. Otherwise, they can prepare their local accounting standard, local GAAP. Okay. What do you have to understand? That companies required to report financial statement based on law requirement. This is what we will see in chapter number 2. That companies are required to prepare financial statement as per law. Now, how law will define what are the financial statements, that you have to see, and that is why it is applicable FRF. Okay, Ekta? Whatever framework is applicable, you will follow that, whether it is for general purpose or it is for specific purpose. We're back. Alok, we will try to cover questions, but definitely we will not be covering all the questions. I will suggest is, whenever there is a question, you get any doubt, do ask me. Okay, we'll try to cover the question. That is definitely the attempt, but it's not like we will cover each and every question. We'll try to do mock tests. We'll try to take couple of questions that are relevant for the chapter, and that is how the class will go. Because syllabus of audit is very vast, and that is the challenge. Okay. Let's understand opinion, because the opinion of the basically topic is remaining, and the true and fair. Let's first of all cover now, true and fair. Can anyone tell me what is the difference between true and fair? Yes, you can do chapter wise, and I would recommend to do the chapter wise. Whatever concept you cover, do the relevant question in the practice kit. Okay, same time. If you want, I will give you the homework of the relevant chapter. Okay. Anyone who can tell me the difference between what is true and what is fair? Anyone? What is true and what is fair? Nice. What is the difference between true and fair? Tell me. No one? Class is silent again. Yes, Alok, please go ahead.
सर मतलब ट्रू मतलब जो होता है वो मटेरियल मिसस्टेटमेंट ना हो, एंड जो फेयर होता है वो उसमें उसका खुद का पर्सनल इंटरेस्ट ना हो, मतलब कोई भी काम में पर्सनल इंटरेस्ट ना हो, जो भी हो शेयर होल्डर्स के लिए कंपनी के लिए करे.
No, no, no. This is not this. Any other person? Ekta saying true means correct accounting standard, fair means monetary fair. No, no, no. Anyone else? Preeti, you are very close. True is correct, but fair is better, unbiased. Okay. See, when we say na financial statement prepared applicable FRF. Okay. What we mean is that financial statement give a true and fair view. Okay, what this line means that when financial statement are prepared as per applicable FRF, there is no material misstatement in the financial statement. We say that financial statement give a true and fair view. That expressing opinion whether financial statement give a true and fair view prepared in all material respect in accordance with applicable FRF. Financial reporting paper apply from country to country, and it assumes that international financial IFRS will be the reporting standard. For audit subject, we will assume IFRS is our applicable FRF. Okay. So, and FRF is very country to country that I have explained in detail. And financial statement should be prepared in all material respect. This line is clear. What this true and fair view means? Let me give an example. Let's say you are working and you are preparing for ACCA. So you go to your employer and ask them for 1 day leave because there is a special lecture. You say, okay, Vishal is taking an audit lecture, so I want to attend that. So your employer approves. Okay, he says that okay, you need a lecture and you should be preparing for your career, and employer is supportive, so he gives you 1 day leave off. Now what happens? That day I get sick. Okay, again good faith, but I get sick and the lecture is cancelled. So you went to the class. But because class was cancelled, now basically the class was supposed to be 3 hours, but you went to the class within 5 minutes, it was informed that I'm sick. So now what you did, instead of going back to office, what you did, you go to the movie theater. Okay, you spend time there with your friend or whatever. Okay, that you did. Now, what happened in the same movie theater, your employee was also there. He saw you that you were in the movie theater. Next day, when you come to the office now, your employees basically ask you to, come in their cabin. And then they ask you, did you go to the class? You would say yes. And interestingly, that will be the fact. You actually went to the class. It's just that you didn't inform them that the class was cancelled. So you didn't lie. It was the truth. But was it fair for the employer? Because you didn't give them full information. By chance, employer knew about it, but you didn't give them full information. So concealing, not giving full disclosure, try to create a biased opinion is not fair. Though it might be true, might not be fair. So what is fair? that you provide them unbiased opinion, clear, impartial. That what you basically intended to, what you intended to do there. You intended to hide the information. That is not the case. When employer asks, did you go to class? What it means that did you basically used your time for 3 hours for your class? That was the real question. The question was not did you went to the class. The intention of the question was did you attended 3 hours of the class? Was it fair for you to reply yes I went to the class? No, you should have said yeah I went to the class but the class was cancelled so I went basically I used my time in the movie theater. That would have been true and fair. Though question was only asked that whether you went to the class. The fair statement would be that I went to the class. This is a true statement. But the class was cancelled and I went to the movie theater. This information was not asked, but it is fair for the user. Now clear between difference between true and fair, everyone. What is the difference between true and fair? Yes. This is another example. This is a very popular movie scene. Let's say, if you don't get this example, let's say another example. This is a very popular movie scene. Let's say Mr. Amitabh Bachchan. Okay, he's a hero. He's our protagonist. He's our protagonist. So what is happening? There is a night scene that there is raining, and he's going to basically confront the villain. Okay, villain is basically standing nearby a rooftop hill. The raining is there. It is a night time, and Mr. Amitabh Bachchan is delivering his dialogue that okay, I am forgiving you because of my family members had convinced me. Otherwise, I wouldn't have forgotten you. So this is your last warning. This is your last warning. Please change your ways, the way you do your practices. Please change your way. Otherwise, I will come and punish you. This is what he is delivering. The villain remains silent. So this surprises the hero. He go in and check on the villain. The moment he go and check on the villain basically the person he was thinking the villain was not a villain but a victim. Basically, he was stabbed with a knife and the person falls. By no logic sense, Mr. Amitabh Bachchan decides and take the knife in his hand. Basically pulling the knife like it will save the person. Don't know why, but this is the Indian film logics. So the person basically pulls the knife and at the very same time police arrives. Now in the court, the discussion will go on. Basically, the prosecutor will try to, frame Mr. Amitabh Bachchan saying, did you pull the knife? Were you there? These are the two questions. Mr. Amitabh Bachchan will say, yes, I was there. I pulled the knife. Now the prosecutor will say, so my lord, this is final. He is the killer. No. This was a persuasive evidence, not conclusive evidence. Not conclusive evidence. It was persuasive. Yes, the knife was found in his hand. Yes, he was there. The body was in his basically hands when basically police found him. So it is persuasive that he may have killed the person, but it was not conclusive. Whether anybody saw him killing the person, that could have been conclusive. Clear? So what is true and fair? That if prosecutor try to frame him based on this information, this is true, but not fair to the user. Clear? True and fair? I know this is a stupid example, but I hope you get it true and fair. Yes? Okay. So this is true and fair. Basically, what is fair? Not being unbiased, not being biased, not trying to manipulate the same information that favors you. No, you try to give information as is, unbiased, clear. That reflects the commercial substance. Okay, now I have to explain commercial substance. What is commercial substance? Anyone by chance? What is commercial substance? Anybody? What is commercial substance? If you have learned the financial accounting, you must know this concept. The first class is only about, clearing your doubts, clearing your concepts, which I know you will carry forward. But in my class, I don't want you to carry forward any, doubts. Now, what is commercial substance? Yeah, this is the problem. Now, it's not like you haven't read it. It's like you have forgotten. No. This is not commercial substance. This is assertion. What you have said now, this is assertion. Amounts reported in the financial statement is an assertion, not as commercial substance. Okay. You guys are at skill level, so I can expect this example. Let's say I am Mr. A, and this is Mr. B. Now, Mr. A in his balance sheet, has a PPE, a land, let's say 10 crore. Mr. B also has the same property. Let's say this is the property. This is my property. This is Mr. B property. Basically, nothing is there. Just, this is on the left side. This is on the right side. The location is same. Basically, my market price is same. This is 10 crore. Okay. Let's say this is 5 crore. Mr. B bought it for 5 crore. Mr. A bought it for 10 crore. Whatever. Current market price of this property is 100 crore. What will happen? Mr. A will ask Mr. B, you know what, Mr. A, let's try to sell, let me sell my property X, this is property Y, I will sell you property X, and in that return, you will basically sell me property Y. So, Mr. A will be the owner of property Y, Mr. B will be the property X. Does it change anything for Mr. A and Mr. B? Nothing. Because property is in the same location, same size, nothing is there. Basically, the soilage, everything is fine. You know what? Why they have done this selling? Now, Mr. A will pass this entry. Property Y, debit, how much? 100 crore. Because when you buy a new property, you have to, when you buy an asset, you have to record it at its fair price. Okay? So fair price is 100 crore to property X. How much? 10 crore. Okay? Property X, 10 crore. And to profit, this is realized profit, to 90 crore. Now, just changing the property from property X to property Y. Suddenly, Mr. A balance sheet had a PPE of 100 crore and in PNL, he had a 90 crore profit. It was created out of thin air. Nothing commercially happened. No actual transaction happened. And similarly, in Mr. B, there is a 100 crore property and profit 95 crore. Don't you think this is a manipulation of books? Don't you think this is a manipulation of books? You are just inflating your assets. You are just inflating your profit. Nothing. There was nothing change. Yes or no? Yes or no? This is called basically no commercial substance. No commercial substance. You just did the transaction to basically make your books look good. Nothing was there. Yes, it's true, but not fair. So true fair includes that transaction should have a commercial substance. Clear with this example? That a transaction should have a commercial substance. So let's say Mr. A sell this property to, let's say, any Mr. B. It is a third party. So here in this case, there is an actual transaction. Mr. receives bank amount or something in return. Something in return that is genuine and not, exchange of property that has a similar value and nothing is, happening here. You are just inflating your assets. Right? So commercial substance is that it is a genuine transaction, not a fake transaction. So true and fair basically that reflects the commercial substance. That is, unbiased, clear. Everybody is through with this? Okay. Look, this is basic. I know. Whenever it's a commercial substance, I have to explain the concept. Okay, let me unmute you, Alok. Alok, are you there?
Yes, sir.
Okay, tell me what is the entry? Let's say you are selling me property for a bank amount. What would be the entry?
नहीं सर, मुझे ये नहीं समझ आया कि वो किसने प्रॉफिट कमाया ना, किसने कितना प्रॉफिट कमाया.
Forget about it. Tell me what would be the entry for selling a property? Bank debit to property sale?
Yes, sir. Yes.
To profit?
Yes, sir.
Let's say property you purchased the property for 10 crore. You sold it for 100 crore. Bank debit 100 crore to property 10 crore to profit on sale is 90 crore. Yes or no?
Sir.
But what if you are getting property in return and same value property? So what is happening? Property debit 100
Yes, sir.
crore to property credit 10 crore to profit realize 90 crore. Was it
मतलब वो 10 करोड़ की प्रॉपर्टी 100 करोड़ में मिली ना.
हाँ,
90 crore का प्रॉफिट. यस सर.
Okay, but the property you got, basically your property also had a market value of 100 crore. It's just that you recorded at a cost. So in order to inflate your balance sheet, what you did, you recorded at the market value. It is not allowed as per accounting standard PPE, if you know about it.
Yes,
Unless
sir.
you revalue your asset, it is not allowed.
Yes, sir. Yes, sir.
Right? So what you did, you just over, because you know, if you revaluate it, this will come in the OCI, not in the PNL. This 90 crore will come in your OCI, not in the PNL. But because you show it as a sale, it will not be realized profit. Now you can use it to distribute profits. Right, Alok?
Okay, sir. Okay.
So this is a manipulation. This is not a commercial transaction. Right? Substance, basically in the legal form, it is showing as a sale. But in reality, this is not a sale. Okay? Another example, if you are not clear with this property example, so guys, I hope you know financial instruments. Financial instruments. Let's say you have convertible debt. So if there is a debenture, so you will not show it as a liability, but rather you will show it as equity, because this is convertible. This is substance of the transaction. This is only happened because of the implementation of IFRS. In IFRS, if you have taken a debenture and you are going to repay them in the equity, then the component that you are going to repay in the equity should be shown as equity and not as a debt, not as a liability. And similarly, if there is a preference share capital which is redeemable, which you are going to repay, in this case, it should not be shown as share capital. It should be shown as liability. Again, a commercial substance. Maybe the legal form is showing something, but what you are doing is you are showing the substance of the transaction. Clear, everybody? Okay, clear? Any doubt? Half of the class went into doing the accounting, and this is a very, very good reminder. This is a just a moment, Ekta. This is a very good reminder. Please revise your accounting. Right now, I am trying my best level to help you with the accounting. In the upcoming chapters, non-current assets, inventory, provision, trade receivable, I will not be able to help. I expect you to have that knowledge. You guys are at skill level. So please revise if you need to. You have ACCA study hub, you can do that. You have prior books, please use that, but please revise your accounting. Okay. Yes, Ekta. Yeah. Go ahead, Ekta.
या सर, तो आप जो कमर्शियल सब्सटेंस का बता रहे हो, दैट इज बेसिकली कि जो हम अपनी फाइनेंशियल रिपोर्टिंग में, फाइनेंशियल स्टेटमेंट में जो भी अकाउंट्स जो भी हम रिपोर्ट कर रहे हैं अपने हेड्स को, वो हमारे करेक्ट अकाउंटिंग स्टैंडर्ड के बेसिस पे होने चाहिए, यही है ना? मतलब लाइक if we sell the like PPE, if we sell the PPE,
It should be a genuine transaction, not a, let's say I make a sale,
right?
to my brother basically sale to me. So we are overinflating our sales. We are just overinflating our sale to, attract, right?
So इस केस में सर, जो आपने मुझे बताया ये वाला केस, तो इस केस में मेरा बैंक, जो भी मेरा कैश एंड बैंक होगा, वो भी इतने अमाउंट से बढ़ेगा, एंड मेरा पीपी पे भी इफेक्ट आएगा और मेरे पीएनएल में भी इफेक्ट आएगा, राइट?
As an accountant, you should be able to recognize what is a genuine sale or not. Let's say,
राइट.
what I would do, I would create a fake sale entry to my brother. Receivable debit to basically sale. Now, what I will do, I will never collect this receivable. Now, the same entry would be made by my brother. Let's say purchase debit to creditor. Now, what will happen? He will make sale to me. Receivable debit to creditor, and I will make purchase debit to basically creditor. And this way, we will continue this cycle. Now, the payable and receivable, I will just offset it. And at the end of the day, it will be a very small amount.
Yeah, right.
So this is a fake transaction. This is not a genuine commercial transaction, which could have been done with a third party. Third party would have basically either paid you or collected cash from you, right?
Okay. Okay, sir.
Got it? You guys are asking accounting question. Yes, Alok. Yes, please tell me.
बट सर, अगर हम एक जगह परचेज कर रहे हैं तो एक जगह सेल भी तो कर रहे हैं, उससे हमारी अमाउंट्स में क्या फर्क है?
My purpose was not to explain the account. My purpose was to show you that whether this is a genuine transaction or not. Whether you can identify a genuine transaction. If it is a genuine transaction that you could have done with a third party and there was no hidden purpose in it, and it is a commercial substance. But if there is a hidden purpose to manipulate the book, then it is not a commercial substance transaction.
Okay, sir.
Got it, na?
Okay, sir. Okay.
Sorry. Yeah. Now, coming back. True and false clear. Now, last topic which I want to cover, this which is important, the opinion part. Next, we will cover less thing we will cover in the next class, and we'll also start the chapter number 2. No worries. It's okay that if we spend time here right now, because in upcoming chapters, these fundamentals are required. Now, next thing, opinion. Auditor expresses opinion. Auditor expresses basically 3 types of opinion. First is unmodified. Second is modified. Unmodified opinion is also known as unqualified opinion, or this is known as, now this modified opinion has three categories: qualified, adverse, and disclaimer. Okay, very important concept. Please, everyone, I know this is the last time, but please pay attention. Opinion is basically two types. One is unmodified or unqualified, or modified. When I say unmodified or unqualified, as an auditor, I am saying financial statements are prepared as per applicable FRF and they represent true and fair. I know, most of you are thinking why it is unqualified. See, it is a name convention. That what I'm saying, that whatever is reported in balance sheet, P&L, statement of profit and loss, or statement of financial position, whatever is reported there, this is representing true and fair view. Nothing is materially misstated. That is my opinion. For this, you will collect a lot of evidences. You will basically check and basically find your conclusion. And this is what you are reporting. This is what you are reporting in the audit report. In the audit report, which you will cover in the next class, you will mention that financial statement represents a true and fair view. They are not misstated. This is called an unmodified opinion or unqualified opinion. Okay, that everything is okay. If it is an unmodified opinion, everybody gets a consent. Yes, finally everything is okay. Management takes a relief, shareholder takes a relief, employees takes a relief, government takes a relief. Yes, everything was fine. What is unmodified opinion? I'm just telling you. This is qualified opinion. This is qualified opinion. This is adverse opinion, and this is disclaimer opinion. Okay. What is modified opinion? Auditor finds material misstatement or unable to find evidences about a material amount. Okay. This is where auditor gives a modified opinion. That auditor say, I was doing audit of balance sheet and P&L. Okay, let's say this one. I was doing audit of this balance sheet. I was able to identify this 8 crore, but I was not able to identify this 50 lakh. This is again a material amount, but I was not able to identify it. I was not able to basically get any evidences. I tried to ask the management to provide me any bank statement, anything, but they could not do so. So I was unable to identify the evidence to confirm that yes, 50 lakh exist. Or let's say I checked this cash and this was incorrectly reported. Whether due to fraud or error, that is another thing. But I could not find any, basically I find the evidence that this was misstated. Either I conclude, yes, this was misstated, or I was unable to conclude that this was misstated. In both cases, I will modify my opinion. I will say that yes, financial statements are materially misstated. Now, whether it will be qualified opinion, adverse opinion, or disclaimer opinion will depend on the impact. Impact of the misstatement. If let's say misstatement is 5%, 10%, or 15%, not impacting the entire balance sheet. Then I would say, okay, let me issue a qualification. What is a qualification? That everything is okay, except this one item. Let's say inventory. Entity had 10 crore asset, inventory was 1 crore. I was not able to identify the inventory value, or I found that inventory value was misstated. Either I was unable to conclude, or I concluded that this was misstated. So in this case, I would say that at least 9 crore is still okay. 9 crore is still okay. So let me qualify that yes, balance sheet, P&L, or financial statement as a whole qualify. It's just that except for this item, because I was either unable to conclude or I concluded that this was misstated. What if this is adverse? What if, let's say 90% of the financial statement are misstated, 40% of the 50% of the financial statement are misstated, 40% of the financial statement are misstated. And this is I concluded this. Yes, I found evidences that financial statement are misstated. And it is not, you know, I cannot just give an exception that this is inventory, this is trade receivable. No, misstatement is everywhere. It is inventory, it is trade receivable, it is cash. Now, how many exceptions I will give? There's so many misstatement that only giving qualification is not enough. Only giving qualification is not enough. In that case, I will say these are poorly prepared financial statement. I give a adverse opinion. What I'm saying, I have found the evidences that this is a poorly prepared financial statement. There are impacts that are so huge, so pervasive. Pervasive means that it is impacting majority of the financial statement, that I cannot just qualify my opinion. And finally, that management was not cooperating with you. You were not able to obtain any evidences. Whatever evidences you are collecting, management was stopping you. That means you were not getting any evidences. So what did you do as an auditor? So because you are not able to find anything about anything, so in this case, you will resign. You will resign and give a disclaimer. This is a disclaimer that people listen. I couldn't find any evidences. Management didn't help me. Management didn't provide me any reports, any accounts. So I am basically resigning and I'm giving a disclaimer that I have no opinion on this financial statement. I cannot say whether this financial statement are basically materially misstated or not. This is for majority of the things. So in adverse opinion, I found the evidences. In disclaimer opinion, I didn't find anything because management didn't cooperate. So I resigned and I gave a disclaimer. In qualification, I was unable to find something or I found something, but it is a exception. It is a exception because amount is not pervasive enough, not for everything that I need to, you know, give a disclaimer or a adverse opinion. So it is a qualification. In qualification, I say financial statement is 90% or 95% is okay, or 80% is okay. That much I can give an exception. It is one item. It was because I was not able to identify, or it was I identified there is a misstatement and management didn't change that misstatement. This is your opinion that auditor gave. So auditor tried to express opinion. Auditor tried to express opinion, whether unqualified that yes, financial statement are basically not misstated, or modified that qualified, adverse, or disclaimer. Okay. It's a very, very huge consequences, Shubham. You cannot think. Just giving qualification. Now, Alok, 1 minute. Just giving qualification. You will see the impact. The Adani Group received a qualified opinion. And just because of that, the entire stock market shook. Regulators were, you know, surprised. Everybody, you know, got panicked. Even qualification is a very, very big major event. So giving a disclaimer in advance, it's a hell-bent situation. So auditor report is so powerful. And in next class, you will learn the power of auditor. That how powerful and how responsible you are. How powerful as well as how responsible you are for the society as a whole. It is very big responsibility. Once you become financial accountant and act as an auditor, you are not merely earning your salary or you are not merely earning, you know, profit. You are working as a social worker. You are working in the public interest. You have a very big responsibility, which we will discuss in the next class. Yes, Alok, please go on. Alok? Alok, were you asking something? Yeah, we are just wrapping up. If you have something to say, then let me know. Any other person have any doubt about the, you know, true and fair? This is the report with auditor prepared. Basically, you can see that here, when it comes to opinion, auditors say that we have audited the financial statement and we give a true and fair view. That here, auditor has given an unmodified opinion. Definitely, we will come back and we will see this. Don't worry. It's not like I'm wrapping it up. We will have some more to discuss in next class. It's okay we spend time here because this is important for clearing the concept. Yes, Alok.
सर जो हमारी क्वालिफाइड रिपोर्ट है मतलब वो 90 to 95% क्लियर है, तो उसको अनक्वालिफाइड कर दिया जाता है या फिर कुछ और करते हैं?
Qualified. This is called qualified. If it is 100% basically free from error, 100% free from error or fraud, any type of material misstatement, it is unqualified. If it is 5% or it is materially misstated, 5%, 10%, 15%, you will qualify your opinion. You basically were either unable to conclude that this is okay, or you concluded that this is misstated. In both scenarios, you will qualify. But
Okay,
it is so pervasive, it is impacting majority of the balance sheet. In that case, it can be either single amount, let's say the entire PPE, 8 crore na, out of 10 crore. This was misstated or you were not able to find. This is so impactful that you cannot just give a basically the
adverse.
qualified opinion. So you will give either adverse or disclaimer based on
Okay.
whether you were able to obtain evidences or not.
Okay.
Okay, so this is it for today. Let me know in case of any question. Class will be same schedule like right Shubham. Preeti's schedule will be Saturday, Sunday, 6 to 9 p.m. Okay. Sorry for exceeding little bit of time. We were in the middle of concept, so I discussed. Okay. Thank you for attending today's class. Do let me know in case of any question. I will be sharing these notes with you in the WhatsApp group. Okay. Thank you, Shubham. Any question, guys? Anyone? We are through. You guys can leave. Anybody, any question? I'll take up that question. Thank you, Nisha. Thank you, Alok. Thank you, Shubham. Yeah, sure, Ekta. Please go ahead. Yes, Ekta.
सर मुझे पूछना था कि जो आप बता रहे थे अनक्वालिफाइड ओपिनियन में सॉरी क्वालिफाइड ओपिनियन में, तो क्वालिफाइड ओपिनियन हम देते हैं अगर हमारा 5 या 10% विच इज लेस आर लाइक मेटेरियलिटी के हिसाब से अगर लेस है, तो उस केस में हम क्वालिफाइड ओपिनियन देंगे ना?
Right. Basically, we say that yes, financial statement are misstated, but they are not pervasively misstated. Not
राइट.
we have concluded for 90% of the item, 80% of the item that yes, these things are okay. It's just that the one amount, inventory amount, trade receivable amount, PP amount, which is not impacting the entire. Let's say it is 10 crore balance sheet, so it is 2 crore or 1 crore, right? So in
Okay.
this case, we can say okay, 80% is okay, so let's give an exception here. But
तो
if let's say,
बेसिकली
yeah, please go on.
या पर बेसिकली टोटालिटी में जो भी हमारा लेस देन 5% रहता है, आई एम जस्ट अज्यूमिंग, आई डोंट नो कि हाउ वी डिसाइड द व्हेन वी हैव टू गिव.
That will come later on.
ओके दैट विल बी अदर. ठीक है. ओके सर.
Don't worry, these are just to explain you right now. This is a very okay.
Yeah, sure. Thank you, sir.
Okay, Preeti, sorry, I can't share the PDF. I discussed this in the last class. Please don't ask me the PDF of the book because this is a copyright issue. I would basically suggest you can basically something request in the group. I cannot say anything more than this. Okay, if you want, you can ask your fellow student whether they will allow you, copy for photocopy or whatever. Okay, I cannot give any illegitimate when I'm teaching you on it. Second thing, this is something I said in the last class also. If there is no resources issue, if there is, I know that people have financial issues. So if there is no such that, then I would recommend to invest. I know the amount is high, but it is an investment that you should, be ready to pay. That is my recommendation. Again, I know every situation is different. You have your own reasons. I cannot judge you on that. Okay, Preeti? So this is my recommendation for, what you want, you can check with your fellow friends. I cannot comment more than this. Okay, you are allowed to check it on the group itself. Don't worry about it. Okay, Preeti? So that's it for today. Thank you for attending today's class. Do let me know if you have any feedback, any question, any improvement you want to suggest. Okay, that is, I'm welcome to any of your opinion. So that's it. Let's meet next week. See you to next time. Okay, bye bye. Thank you, Preeti.